Okay, so now you tell me what we have studied so far, whatever comes to your mind, whatever type. So this is necessary. What we studied so far, whatever the term, terminology, words, sentence, whatever coming to your mind, please type. How to calculate NAV, beautiful. Date money market, beautiful. Everybody, like, you'll have to be like this, man. Okay, coupon. Okay, awesome. Coupon, right? This is a beautiful thing. What else? Like, I like such kind of intricate thing, right? New things that you have learned. Performance of mutual funds. We are going to see details. We had a just superficial understanding only about mutual funds. Today we will be going to details after completing this stock market. Performance yield, beautiful. Deepak, yield, right? This is something new we understand. CAGR, yes, how it works. Language of bond market, yes. So language of bond market. Bond market is very easy. Only thing is that language is different. Language is different. If we understand that language, then bond market is very easy for us actually. Performances, volatility metrics, beautiful volatility metrics. So this is something very important while choosing the bond fund, because sometimes you may get deceived, because this is how the structure is. It is not that somebody is deceiving you, but this is how the structure is. It's a loose structure. That's why we need to look at the matrix. Okay, beautiful, awesome. Thumbs rule I gave you, beautiful. Thumbs rule we'll be using because thumbs rule works. That's why we'll be using this thumbs rule. Then matrix grid, yes. Value research, okay, yeah. How to see? Today again we are going to see details in value research once we are through with the equity, mutual funds and all. Matrix grid, bonds and debentures and money market, long duration, short durations, fulcrum method, beautiful, Kabir. Okay, so this is going to be in your head, I believe. Like, that's why I show you that long duration, short duration, such that okay, you do not get confused. Structure of mutual funds, very important. Volatility is linked with duration. Yeah, duration means volatility. Duration is, yeah, duration has to do with time, but in bond market, when somebody says a very long duration means it's a risky fund. Short duration means that's no risk. Okay, that's a short duration fund. Okay, but please remember, I am repeating again, please remember, short duration does not mean that you cannot invest for longer period of time. Okay, in short duration fund also you can invest for 100 years, because what will happen, this fund manager will keep buying and selling. Suppose now this bond is over, they will buy another bond. This bond changes, duration changes, they will sell it, they will buy another bond. So that's why it is the responsibility of the fund manager such that they can maintain the duration, and while maintaining the duration they can choose the best performing bonds. Okay, so this is the challenge of the fund manager. So that is the reason why duration does not mean, when you are buying a long duration, short duration fund, it does not mean you cannot invest for longer period of time. Okay, you see a lot of people do not know that. Even like one bank guy, he was a bank branch manager, so he was also telling me that same thing, like so 2 दिन के लिए इधर रख दो, तो ऐसा something. And I was just asking, no, I want to invest for longer period of time, इतना पैसा है. तो like ऐसा ना short duration में तो like तो short duration is like 1 month duration है. How can you keep longer, kind of things. Okay, so now this is not demanding anybody, but what happens, people do not understand. People think duration, short duration fund means, I'm not talking about short duration bond, I'm talking about short duration fund. Short duration funds invest in short duration bond, short duration debentures. Okay, short duration means less volatile. Okay, please be clear. Okay, volatility is linked with duration, beautiful. Thumbs rule we discussed, and then Rohit has given a beautiful list. Bond funds, NAV, types of mutual funds, closed-ended, yeah, closed-ended, open-ended, beautiful, large, mid, small, index, terminology of bonds, searching funds on value research. Awesome, Rohit. Anup, date money market, financial formula, terminology in date market, thumbs rule, website to consider. Beautiful. Clear. Okay, delta, yes, Kavir. Delta means change in, delta is not a subject as such. Delta is we calculate it. Okay, delta means change, right? That we calculate. Excel terminologies versus actual terminologies. Yes, Bhavik, awesome. This is very crucial in case of bond market particularly. So everything when we you see everything can be done in Excel Only thing is that we'll have to change the nomenclature. We'll have to change the names such that Excel understand. Okay. Okay, Kabir, well-defined units, LCA, MC, SC, IF. Okay, PMT is equal to coupon, percentage of face value. Rupinder, beautiful. This is where a lot of people get misled. PMT is coupon. Coupon is PMT. Please remember this, right? And sometimes it is being expressed as percentage of face value. This can be misleading. Government bond can give you 8-9% coupon. This is not return. Return can be only 4-5%. Okay? I'm just saying it. So you'll have to do that calculation. So for that, you'll have to look at yield. Yield is the return. Okay? Yield is the ROI. Yield is the rate. Product to be chosen as per goal, value research and Morningstar awesome. Bonds are secured and debentures may not be secured, backed by collaterals. Yes, debentures are not backed by collaterals. Okay? Debentures are just debentures based on the reputation only. When it is bonds are secured. So somebody is giving guarantee. Like, there might be collaterals at the back end, so then it will become bond. How those debt funds value research? Okay, how to choose debt funds by value research? Yeah, that's what we have seen today. We are going to deeper. Going deeper, we will exactly how to choose the best fund. Amongst there are so many, how to choose exactly the best one that we'll understand. Your method beta value balancing yet to discuss. Yes, rate change. Yes, exactly. Okay. So now we are ready. How many of you, okay, not how many of you. Okay, first, how many of you have knowledge about, what percentage knowledge do you have about stock market? 0, 100, 110. What percentage? HP is saying one, everybody. You'll have to be like this, if you want to learn. Okay, 0, 0, 0, 50, 50, 10%, 25%, 10, 0.5. Okay, Kumar loved it. Okay, Deepak is 30, Anup is 1%, Bhavik 50%. Okay, awesome. What about others? What about others? नहीं है, कुछ भी नहीं है. Okay, 50%. Okay. Okay, thank you so much. Okay, thank you so much for your response. Now, okay, so now, okay, whatever you are, wherever you are, I'll make sure that you understand stock market. And stock market is very, very simple. Somebody who has some knowledge about stock market, if I ask you, hey, what is stock market, man? I don't understand. Technical knowledge is good. Kunal will, that is a different thing, okay? Okay, so that is a different thing. But first, let us understand what is stock market. So who will tell me what is stock market? I don't understand. I am the newbie. I don't understand. What is stock market? Ownership is given company in shares. Okay, company shares. Okay, beautiful. What else? Anybody who has some idea about, okay, this is stock market in a simplest language. Okay, without making it complicated. Buy is selling, partnership in stock market. Beautiful. Okay, where trading happens. Okay, it is market where shares are bought and sold. Yeah, shares means, what is shares? What is equity? What is shares? What does it mean? Somebody, what is shares? Secondary market. Okay, beautiful. What is shares? What is equity? Somebody can tell me in a very simple language such that I can easily understand. Part ownership of a company. Okay, beautiful. Buying stake in company. Your ownership is company. Share is ownership on the company. Beautiful. Awesome, guys. Thank you so much. Okay, so now you have already answered it. Okay, it is very simple. All of us understand partnership, right? Ratio of investment, Bhavik, beautiful. Companies for their growth acquires public investments. Yeah. So now basically how they acquire a public investment, they sell partnership. You know partnership. So it's all of us know partnership, right? Suppose we have a company and we 3 partners are there, and one partner, he wants to get out of it. He said, I don't want to do that business. So stock market is a place where he can go and he can sell his partnership. Okay, so partnership can be 30%, partnership can be 80%, partnership can be 1%, partnership can be 2%. Okay, very simple language, that is share market. It is a market where you can buy and sell partnership. Okay, a very simple language. So of course, the actual process I'm going to tell you a little bit. actual legal process is like, there are a lot of things to do, but concept wise, this is share market where you can buy and sell partnership of any business. Once you buy a share, you become partner of that company. Clear, everybody? Please type CLR. Please type CLR, everybody. Anybody has any question, you can ask me, because this fundamental understanding is necessary. Then you will understand valuation. If you do not understand the very fundamental things, you will never understand valuation. Okay, so you will have all the assumptions and all these things. Take a clear? Okay, awesome. Thank you so much. So now how exactly it happens? I am not covering the legal aspects. How exactly it happens? Let me show you. Suppose this is my company. Okay, मेरा पेन अटक गया. Digital pen. Okay. Okay, can you see my whiteboard? Yes. Okay, thank you so much. Thank you. So now, this is my company. So you know what is the name of my company? What is the name of my company? Know that? Okay, yeah. Saintward Solutions Private Limited. Okay, Saintward Solutions Private Limited, SSPL. So this is my company. Okay, so now how I establish this company? So we need to understand it first. How I establish this company? Now there is a difference between the company and businesses, normal businesses, proprietorship and partnership, etc., etc. So for shares trading, it should be a company. Okay, so it should be a company. I'm not going into details. It is not necessary. We don't need to understand that much. So, but the thing is that please be sure, for shares buying and selling to happen, it should be a company. So now this is a company. How I establish my company? So now this company, I asked my CA to establish this company. Then a bank account is open in the name of the company. After getting the necessary permission from the government, a bank account is being opened. A PAN card is being issued in the name of this company. So please remember, the company is different. This is the first thing you should understand. Company is different. Name of the company is Reliance. It is a company. It has got its own PAN card. It has got its own bank account. Ambani they are the shareholder. They are majority shareholder. Okay, they are majorities. Most of the shares are held by them. Similarly, there are some companies where there is nothing called majority shareholders or some institutions, right? So there are so many companies where the banks are the majority shareholders, professionally managed companies, right? L&T is there, and then there are so many companies. There are ICICI Bank, so many banks are there. Okay, so now this company is an independent entity. Saintward Solutions Private Limited is a company established by me. Tomorrow, if I am not there, the company will remain until and unless it is resolved. Until and unless it is dissolved. Sorry, kya bol raha hu? Okay, until and unless it is dissolved by taking proper, what is called, like, proper legal process. Okay, it is not me. My account is different. I get salary from my salary and then commissions, etc., from my company. Okay, it's not that, like, whatever is coming, like, I can take it out of this. I can take it out, but I'll have to mention it. So this is salary. Tax treatment will be different. This is commission. Tax treatment might be different. This is dividend. Tax treatment will be different. Okay, so this is a company. Okay, please clear. Everybody clear about this? It's a separate entity. It's like your kids. It is your kid. But it's not you are not your kid. Your kid is different. It is your kid. You produced it. Your kid has its own PAN number, own Aadhaar card, own identities. Exactly same way, company is also a identity, separate person. Separate, it is called separate legal person. Clear, everybody? Please type CLR. Please type CLR. Everybody, if you have anybody has any question, then you can ask me. This fundamental, if you understand, you will understand valuation. Otherwise, you will never understand the valuation. Okay, you will always confuse. मैंने शेयर खरीदा, मुकेश अंबानी के पास गया कि मुकेश अंबानी के पास पैसा नहीं जाता है. Until unless he sells shares, we are going to discuss that. Okay, it is an artificial person. Awesome. Okay, awesome. Thank you so much, guys. Okay, got it, right? Okay, beautiful. So now, how I establish it? What I did? So it has got its own bank account. I gave 1 lakh rupees. I deposited 1 lakh rupees. And this company gave me, so this is me. The company gave me, say, 1,000 shares. Okay, 1,000 shares is gave me. And then after that, what we decided, okay, like we need some money, and then I don't have that much of money. So what to do? Okay, let us find out somebody who might be interested in investing in our company, becoming a partner, becoming a shareholder. So now this is you. This is you. So we make this presentation. Hey, you say this is our company. This is what we are going to do. So will you be interested in investing in our companies? Means investing in our companies means will you be interested in becoming a shareholder, becoming a partner of our company? You said yes. I said, what is the price? Okay, you see, I will give you for rupees 5 lakhs, I will give you 250 shares. Okay? I will give you 250. Okay, let me make it bigger. ठीक है, चलो यार चलता है, ठीक है. 250 shares I will give you for 5 lakhs rupees. You agreed. Okay, fine. So you deposited rupees 5 lakhs and the company gave you 250 shares. So how many shares are there in the market now? How many shares are there in the market now? You please keep responding. Fatafat. Total, how many shares are there in the market? Total shares, how many? Total shares, there are total 1250 shares, right? So there are total 1250 shares belongs to Saint Road Solutions Private Limited. Okay, total 1250 shares. Clear, everybody? Clear? Please type CLR. Anybody has any doubt, you can ask me. Okay, I have 1000 shares and you have got 250 shares, total 1250 shares there. One more time, sir. Okay, Arpita. Okay, Arpita. Okay, please be attentive. Okay, so when I established this company, what I did after getting all the license and all, I deposited 1 lakh rupees in company's account. I gave 1 lakh rupees to the company. Company means Saint Road Solutions Private Limited. And Saint Road Solutions Private Limited gave me 1000 shares. Right? So I was the only shareholder at that point of time. Of course, it's not me, like, it's my family. So my family is the only shareholder at that point of time. Then I needed some money, another 5 lakhs rupees I need. Then I approached you and you loved it. And I said, okay, 250 shares I will give you if you give me 5 lakhs rupees. So you agreed. Okay, fine, 5 lakhs rupees I will give you and 250 shares I am giving you. Clear? Clear till now? Arpita, clear? Okay, just a moment. There are would 250 be given from 1000 shares? No, Rupinder. 250 is being given from, it is being issued by the company. That's why it is going out from the company. Okay, beautiful question, right? Beautiful observation. Okay, these shares, I am not giving those shares. My shares are there 1000. Okay, this company is giving shares 250 shares. So that's why earlier there was 1000 shares. Now it has become 1250 shares. Okay, got it? Clear? Arpita, Rupinder, anybody? Clear? Got it? Arpita, Rupinder. Okay, Rupinder. Okay, Rupinder Sani, not clear. Okay. Okay, you see. First, I established that company and I deposited 1 lakh rupees in the bank and I got how many shares? How many shares? Price of shares will differ. Definitely it will differ. That's why, like, you see, you need to, every second it differs. Yes or no? Okay, so slowly we're going there. It differs every second. Yes or no? Yeah. Okay. Okay, it's a company free to create new shares each time it wants new funds. Yes, exactly, Rohit. So we'll come to that. Okay, धीरे धीरे करके, ठीक है? So this you understood. So 1,000 shares, Arpita. Yeah, Arpita, be with me. So Arpita and Rupinder. Okay. So now what I have got 1,000 shares. Okay. Now company wants to grow. So the board, say board like me is there. My all the other board people are there, and Mohini ma'am, like everybody says, sir, we need to expand. Like क्या करें means ये करना है this I don't have money. So what to do? Okay, let us get some partners. Okay, some venture capitalists, some funds, or some private equity, or somebody who is having money want to become a partner. Partner means shareholder. Okay, so we have come to you and you agreed. When you agreed, you said, okay, so there was negotiation. Okay, negotiation happened. Then ultimately we decided, okay, 250 shares we will give you. Against that, 5 lakhs rupees you agreed to pay. So 5 lakhs rupees you deposited, you give it to a company, and company issued 250 shares to you. Clear? Arpita, Rupinder, clear? Arpita, Rupinder, clear? Okay, clear. Rupinder, clear? This much, okay, we'll answer all these things, okay? Clear? This much? Rupinder? Okay, clear, right? Okay, this is how the shares are created, okay? Okay? We are not going to discuss okay, all the details, right? So जितना हम लोग का जरूरी है इतना ही पढ़ेंगे, ठीक है? Because it's a very deep study. So this much knowledge is necessary to understand the valuation, okay? So now, how it is being done, कैसे कैसे क्या होता है, there are like, there are so many things are there, okay? So we don't need to understand this much, but this we need to understand. Till now, it is clear. Now, okay, just a moment. Rohit is asking some questions. Is the company free to create new shares each time it wants funds? Yes. Okay. But why people do not do that? Because what will happen? Like every time I agree, okay, shares do. So, mera 1,000 shares, now I have got 1,000. First, I had 100% ownership. Now my ownership shrinks. So what will happen if we keep on increasing shares? Then what will happen? It will keep on shrinking. Ultimately, the existing shareholders' value will come down. Not value, number of holding will come down. Value can increase. Value can increase. Okay, you will understand all this stuff. Okay, don't worry. Okay, so now, but the thing is that is why it is not necessary that every time we will issue shares. No, when we have no other way, then only we will issue shares. Okay, so these things like they are slightly deeper. We don't have to understand this much to master mutual fund. Okay, got it? Okay. Okay, same partnership. Okay, just a moment. Okay, there are so many questions coming. Okay, if this is the way it goes, then proprietor would have same partnership even after selling shares. Rupinder Sani, no. That's what I have discussed, right? So it will come down. That is why when मेरा कोई रास्ता नहीं है, मेरा पास पैसा नहीं है, लेकिन I need to establish an office in Delhi, I need to establish office in Ahmedabad. We have got a lot of clients from Ahmedabad, so they are asking, sir, I have an office there. But to establish an office, I need money. I don't have money. What to do? I'm coming to you. Hey, 250 shares दूंगा. मेरा पास 1,000 है. 250 I'll give you if you invest this much. You see prospect there. Okay, so you will invest. Those who sees the prospect, you will invest. Okay. Kumar, for 1 lakh, 100 rupees is the price of shares and 5 lakhs, 2,000 will be the share price, right? No, Kumar. Every second price changes. Every second. Okay? At that point of time, this was the negotiation. Otherwise, what will happen? You will get one share for 10 rupees, Reliance. Not even 10 rupees. वो बोना सोना सके बहुत हो गया. 10 पैसा 15 पैसा में मिलेगा. देगा कोई? ठीक है? When Dhirubhai Ambani started it, 1 rupee. Like now, when I started my company, it's 10 rupees one share. Okay? Here I am giving a rough figure, but otherwise, like not 10, मेरा 100 rupees है. So 100 rupees one share. When Dhirubhai Ambani started, I think it was 1 rupee per share. आज 1 rupee में मिलेगा. Will you get Reliance shares for 1 rupees? You can say, no, I bloody Dhirubhai, he started with 1 rupees. Give me at 1 rupees. Okay? Nobody will give you. Got it? Value changes. That's why we need to understand how the value changes. That is what valuation is. Right? You are asking good questions. Right? So that is what we need to understand. Okay, how it happens. Okay, Kumar. Okay, Kumar, clear. Anup, if you started a company, then initially there are 1,000 shares which are equivalent to 100% of the company or not. Initially it was 100% company, 100%. Now 1,250 is 100%. So my percentage has come down. Okay, percentage has come down. Got it? So every time there is a new shares issue, my percentage will coming down, but my value will come down. Now you see, like, now Dhirubhai Ambani owned 100% when he started it, but his valuation was probably like very, very less. Today you see, I think it's somewhere 50 some percent. Ambanis are having 50 some percent, but you see that value. So value is different. Okay, value increases. That's why they issue shares. Otherwise, nobody will issue shares if they cannot increase the value. Okay? Do not go there that much. Okay, you'll not everything. Okay, it'll be like confusing. Okay, though if you are so much interested, like when we will launch, not launch, it is already launched. When we'll start next MIM batch, then you can join there. So there we go details into all this stuff. Okay, today for mutual funds we don't need to understand this much. Okay, but this percentage. This of course we need to understand. What is the face value? What is the impact of reducing? Kunal, there is no impact of reducing your face value. Face value is nothing. It's an accounting figure. Again, in MIM, if you do, in case you do, you are interested, you do MIM. Later, when we will start it, then you will understand all this stuff. So there we go to balance sheet level. Here, it is not necessary to go to the balance sheet level. Okay? So in percentage wise, value of 1,000 shares will be reduced if we increase the number of shares. Yes, of course, percentage will come down. Okay, got it? Okay, Rupinder. So my understanding is with 1,000 shares, 100% ownership, and with 1,250 shares, 80% ownership of original owners. Yes. Yeah, Rupinder. Clear, everybody? So now what happens now? Value has increased. Okay, share price has gone up. When I started it, share price was how much? It's like 1,000 shares, 1 lakh rupees. So how much? 100 rupees, right? Yeah, 100 rupees, right? So what the price now? What is the price? 250 rupees and 5 lakhs. What is the price now? What is the share price now? When I 2,000 rupees, right? Got it. So when I started, it was 100 rupees. Now the price has gone up to 2,000 rupees. Okay, this is how the price goes up, right? It's not that easy, straightforward. Okay, so we slowly will understand. Slowly will understand. Okay, clear, everybody? Till now, this is clear. This is clear. Please type CLR. The value comes as a result of negotiation. As a result of negotiation, yes. Stock market is nothing but negotiation. मैं इतने में दूंगा, मैं इतने में बेचूंगा, मैं इतने में दूंगा, मैं इतने में बेचूंगा. I'll sell at this price, I'll buy at this price, I'll sell at this price, I'll buy at this price. That is stock market. Okay? Right? Okay, don't worry. Okay, you'll master it, man. You have that the urge to learn. Definitely you will learn, you will master it. Clear, right? Everybody clear. Okay, nobody has any question, then I'll go ahead. Okay, so you'll understand slowly, don't worry. So now you need some money. Okay, so when you need some money, you said, okay, I have 250 shares. I can sell some of the shares, and and I can get some money. So you approach your friend. Your friend is, suppose, he's your friend, your green friend. Okay, or purple friend. Okay, purple friend. Okay, purple friend will be good. So your purple friend, you go to purple. Yeah, purple has become a beautiful name. So then you talk her. Purple is normally a her. Okay, you talk to her and you say like, I have been a shareholder of this company, and this is what is going. This is what is happening. Right. So this is how they are growing. So will you be interested in buying some shares? I have some shares. I want to sell. I said, okay, fine. So what is the price? So you said, okay, I'll give you 100 shares, but for 100 shares you will have to give me 4 lakhs rupees. Your friend agrees. Okay, fine. So now what happens? Now she gives you 4 lakhs and you give her 100 shares. So how many shares do you have right now? How many shares do you have right now? How many shares do you have right now? Okay, yeah, beautiful, right? Everybody. Right now, you have 150. You have 150 shares. And total shares, what is the total? Write T and then give the number. Total is 1250, right? Yeah, total is 1250 only. There is no change. Okay, there is no change. Got it? Clear this transaction? Very simple. You negotiated with her, said, okay, 4 lakhs rupees, I'll give you 100. She agrees, she finds value. She finds, okay, oh my God, 4 lakhs rupees I am getting, it will be easily 8 lakhs rupees. So she bought it. She was asking for more. She said, okay, no, I need more, man. I need just another 100. And you are saying, no, I don't want to give that. I will just give you 100 only. So you find out somewhere else. Then she comes to me. She approaches me. She said, okay, I have seen, I am a shareholder of your company. I bought the shares from Mr. Participant and Mr. Red. Okay, so Mr. Red, I bought it from you and I want 100 more. So then I tell you, okay, 100 more shares I will give you provided you give me 6 lakhs rupees. She agrees, okay, fine. I'll give you 6 lakhs rupees, but I want minimum 200 shares. So now she agrees, she gives 6 lakhs rupees and I give her another 100 shares. So it becomes 200 and my share has gone down to 900 shares. How many shares are there in the market? How many shares are there in the market? Total market, in the market, Deepak, total market. How many shares are there in the market? Total 1250 only. There is no change, right? There is no change. Clear till now, transactions are clear? Yes, 200 plus 150 plus 900. Okay, clear, right? Everybody clear? Anybody has any doubt? Any question you can ask me. Very simple. Now we have 3 shareholders. Now Saint Word Solutions, SSPL has 3 shareholders. Earlier it was 1, then it became 2, now 3 shareholders, but there is no change in holdings. Okay, so if it is clear, then when money goes to bank account, money goes to the company's account, then this is called primary market. Okay, when you bought the shares, who got money? When the Mr. Red bought shares, who got money? Who got that money? When Mr. Red bought the shares, who got the money? Company got the money. Okay, the company got the money. When Miss Purple bought the shares, who got money? In these transactions, who got money? When Mr. Purple bought the shares from me, who got money? Yeah, red and blue, me and, okay, it did not go to the company. Understood? The money did not go to the company. When the money does not go to the company, then that is called secondary market. Okay, clear everybody? So we'll have to see who is getting the money. It is the company getting the money or is someone else? Maybe promoter. You are buying shares from Ambani's. Money does not go to the company. Clear everybody? Clear? Please type CLR. Anybody has any question, please ask me, because this is very, very important. Lot of people, they have huge confusion here. What is promoter? Promoter means who promotes the company, Kavir. So who promoted SSPL? Who promoted SSPL? Kabir, who promoted us? Me, right? So I am the promoter. I promoted this company. I may be a big shareholders. I may be a small shareholders. Got it? But they are the promoters. But you see, since people do not understand it, they use these terms very interchangeably without understanding. Okay, now promoters are those people who promoted the company. So what happens in many companies, particularly foreign companies, in India also we have L&T, etc., Unilever. Of course, it was promoted by Unilever only. So now it is Hindustan Lever or Hindustan Unilever or whatever. So what happens in those companies, promoters are becoming insignificant. Coca-Cola, Pepsi, Ford, and in our we have Tata's Tata's promoters are Tatas, but they are not majority shareholders. Tata Trust is, of course, Tata Trust is majority shareholders, but there are so many companies where majority shareholders are something else. Promoter is different. Now, what happens since people do not understand whoever is the majority shareholder, they say it is promoter. Yeah, it's chal raha hai, it's going on, but technically it is not like that. Okay, so here also there are so many technical things that I'll discuss briefly, which is necessary, I believe. Okay, if promoter sells his or own shares in market, then this is also called secondary market. Now, beautiful questions. What do you think? Rupinder is asking, if promoter sells his or her own shares in the market, then is it the secondary market? Yes, it is secondary market. I am getting the money. The money I am getting, not that company. It is not benefiting the company at all. Okay, I am selling the shares. Whatever is the market price, based on that, it's not benefiting the company. Company के पास एक पैसा नहीं गया. ठीक है, clear? It's a secondary market. Okay. So now Kabir is asking, money goes to company, primary market, money goes to the promoter, investor, secondary. Money goes to anybody, anyone other than the company. Okay? Money goes to anyone other than the company is secondary market. It can be promoter, it can be others, right? So when you sell shares, you are not promoter, you are a shareholder. When you sell shares, suppose you are having a shares and you are selling it. Somebody is buying it, you don't know who is buying it. It might be Ambani's, you never know. Okay, when you are buying shares, you don't know who you are buying from. Okay, so that's why we need a place for this secondary market. Primary market, no place is necessary. But for secondary market, we need a place. And that place is called stock market. That place is called stock market. If the buyback happens, then you'll have to do from the secondary market. Okay, so then company will give you money, right? So you are going to get money, company will give you money. So money is going to you, not to the company. Company is paying money. Naveen, got it? In case of buyback, company is paying money, paying you money. Okay, it's not getting money. Okay, secondary market, and we have got two stock markets. What are they? We have got two stock markets in India, primarily right now. National Stock Exchange and Bombay Stock Exchange. So this Bombay Stock Exchange and National Stock Exchange, these are like two markets. Like we have one Vashi market, one Dadar market. Okay, Vashi market is like, that's called APMC market. Okay, so now Dadar markets. So it is just like vegetable market. So two vegetable markets. Okay, you can start your own vegetable market, provided all the promoters, they are ready. Because when you start a market, suppose you say, hey, I am starting a vegetable market. All these vegetable vendors, sabji walas, they should agree. Okay, theek hai. So we will come to your place. So how much fees we will have to pay? So you'll say you'll have to pay this much of fees. So are you sure we'll get buyer and seller, buyer? So all these things comes in, right? So exactly same way, these are just like vegetable markets, nothing else. Only thing is that it's more sophisticated now. Computer, earlier it was like vegetable market. The way you see the vegetable, like here gobi milta hai, here you get aloo, potatoes, here you will get tomatoes. Exactly same way earlier when there is no computer. So there used to be counter. You will get Reliance. If you want to buy Reliance, you'll have to go to that place. That place is for Reliance. That place is for L&T. That place is for State Bank of India. So it was like that. Nowadays, everything has become computerized. So like, there is no place as such. So you can just punch the numbers and you can get it. Okay? Clear, everybody? Anybody has any question, any doubt? Nice. Okay, awesome. Thank you so much. Clear. Everybody type CLR. Everybody type CLR. Anybody has any doubt, you can ask me. If this concept is not clear, you are not going to understand valuation. Even if you do MIM, you will feel like there is a huge gap. कुछ तो समझ में नहीं आ रहा है. Okay. That is why this is very, very necessary. This workshop is necessary because of this. You know the ground reality, how it happens. Okay, starting from the company, how it happens. Okay, clear, right? Awesome. Okay, beautiful. So now, okay, beautiful. So if there is no question, then I'm going ahead. So suppose, normally what happens? We go to vegetable markets. So when you go to vegetable markets, we say like, oh my God, inflation is so much. The vegetable price is, it's 25% high. Yeah, everything 25% high. So I do not go to vegetable market. My wife goes. So normally says, okay, oh my God, Utpal, like, I don't know what will happen. Like, inflation is so much that everything is 25% up. So when she's saying 25% up, does it mean that each and every vegetable is 25% up? Does it mean that? Everybody should answer each and every idiotic question if you really want to learn it. Okay? Each and every yes, no, maybe 1, 2, 3, whatever. Everybody should answer it. Okay? No, right? Yeah. No, right? It's an average, right? So does it mean that there is all the vegetables are up, there is not a single vegetable who is down? Does it mean that? Does it mean that? No, this is also not true, right? So there might be some vegetables which are down also. Okay, some vegetables which are up. So now, as you know, it is being calculated. It is being calculated. Some of you have already answered it. It is being calculated. It is being calculated. How it is being calculated? How it is being calculated? It's an average, right? Mental average we do in subji market. Like, there is nobody. Like, there is no computer and all. So we do a mental average. We do a mental average. Okay. So we do the mental average all the 1,000 vegetables available in APMC market. There are like 1,000, if not 1,000, like there will be nearly 1,000 vegetables. So we take the average of all of them. So does it mean that we go to the market and we ask the price of each and every 1,000 vegetables and you do that calculation? No. How do you do that calculation then? How do you do that calculation? Sampling, right? Sampling means what kind of sampling? Thoda sa coriander, kari patta, and what is called so we take that coriander. What do you take in samples? Coriander, adrak, and then what is called the drumstick. All this, everything. We take what we take. How do you select the sample? Tell me, it's a very practical thing. How do you select the sample? Potato you are taking, awesome. So how do you select it? How do you select it? Each category, like everything, like spinach and small things. RV means like colocasia, like whatever. Daily use vegetables, roots veggies, green veggies. We regular use things. Beautiful. Awesome, Arpita. So we only take major vegetables which majorly impacts our life, which majorly impacts the market. Only selected few vegetables we take, we think these are important in our life. And we do a mental calculations, mental averaging, and we come out and then we say, oh my God, okay, everything is 50% up or 25% up. Got it? Exactly same way in case of stock market also, few selected major, not vegetables, companies, shares, they find out an average, and that average indicates how is the market, and that average is called everybody, that average is called index, everybody. Okay, that average is called index. Index is average of share prices of selected few companies. Here in vegetable market, whoever goes to the vegetable market, he or she does that indexing. Okay, but in case of share market, there is a committee. In case of National Stock Exchange, there is a committee. In case of Bombay Stock Exchange, there is a committee. So they choose, they have their written SOP, written selection process criteria. Based on those criteria, they choose, they changes whenever necessary, whenever they think, okay, and then they find out the average. So that is called index. So we have, for National Stock Exchange, we have one index, which is called, for National Stock Exchange, we have one index, which is called Nifty 50. Nifty, okay. NSE, and we have Bombay Stock Exchange, okay, Bombay. Here the index, the main index, okay, there are so many indices, but we have main index, okay, so there are, like, again, cluster, somebody said cluster indices also. So but first let us understand this, okay. We have an index which is called Nifty or Nifty 50. So we have got average of okay. Similarly, in case of BSE, we have the index is called Sensex. Awesome, right? Sensex. And this is the average of share price of how many companies? You know it? How many companies? Average of 30 companies. Okay, clear, everybody clear? Here is the 50 companies, here is the 30 companies. And who decides? There is a committee, index committee. Index committee decides. Clear, everybody? Anybody has any question, you can ask me. If you have no question, then please type CLR. CLR means clear, everybody. Others are not clear? Everybody types CLR. I am telling you, everybody types CLR. Committee same for both? No, Kavir. Committee is different. BSE committee is different. They are employees of BSE. NSE committee is different. They are employees of National Stock Exchange, NSE. What is the difference of Nifty 50 and Sensex? There is no difference. One is, suppose now one belongs to Bombay Stock Exchange, another belongs to National Stock Exchange. Okay, there are two committees, so they choose as per their criteria, as per NSE's criteria, they will choose their 50 companies. Now, as per BSE's criteria, they will choose the 30 companies. Got it? So as per their criteria. So there might be common shares, there might be some shares, a lot of shares are common here also, there also, and there may not be common shares also. Suppose one share is here, of course in Nifty 50, since there are more, some of the shares definitely will not get in BSE. Okay, Sensex. And it's not necessary that each and every share present in Sensex will always be present in Nifty 50. Not necessary, because criteria are different. Okay, they are very similar, they are very, but still, like, whatever criteria they have decided, based on that criteria, Bombay Stock Exchange will decide its own shares, National Stock Exchange will decide its own shares. Got it? It is not top companies as it is. So these are called top companies, but they are not like, say, they are the topmost companies only. No, there are so many criteria are there. Okay, so there are so many criteria. It should be representation of the market. There will be like, the certain kind of balance it quality. Then there are liquidities and so many criteria are there based on that. Okay, clear? Okay. Okay. So if you have no question, then I'm going ahead. If you have any question, then you can ask me. Okay, just a moment. Okay, it's hot. I thought like it's very rainy. So now it is not. Okay, I'm switching on my share market है ना, so थोड़ा सा so share market is like, it's hotting up. Yeah. Okay. Just a moment. Okay. So it's a beautiful weather outside actually. I'm really tempting to going out. But this temptation is bigger for me. Okay. Okay, got it. No rains in Vashi today. Yeah, Kavir. Okay, you're from Vashi. Oh, that's awesome, man. You're my neighbor. Okay, I am in Kharghar. So Kharghar normally like it rains heavy because mostly probably because of this hills. Kharghar it rains like even if there is no rain in Panvel or in no rain in Vashi, so you'll see rains in Kharghar. And like the least rain we get in Navi Mumbai, I think it is Ulue. Might be because it's a very coastal region. Means after the entire Navi Mumbai is coastal, but it's at the like it's at the seashore only kind of. So this is how it is. Yeah, Kharghar is beautiful this time. That's true. Okay, thank you so much, Kabir. Okay, so now let's go ahead. So, क्या डिस्कस कर रहा था? Okay. Index we have covered, so we understand the index. Okay. So now, just a moment. So which one I should discuss now? Okay, NSE and BSE we have covered, right? Okay, chalo. Valuation. Okay, yeah. Who is there? Okay, Kabir. Okay, awesome, man. Okay. Okay, so now, now let us understand how this vegetable market works. So this is very important that we understand vegetable market clearly. So now, what is the price of potatoes? Potato I am taking because potato is the one of the most common vegetables. So that's why I'm going with potato. What is the potato price in your area, everybody? So we are from different areas. So I know like the prices will be different. 30 rupees per kg. Deepak, 30 rupees. Kabir, 30 rupees. Acha. 1500 naira means 15 rupees, 22 rupees, 29 rupees. Okay. Okay, so 40 rupees. Oh my god, 40 rupees. 30 rupees is like it is normal price. What is the normal price? 30 rupees for kg, 1 kg. Yeah, I know that. So this is the normal price or it's a slightly higher price? What is the normal price in your area? Hey, everybody, whatever, like, in your area, what is the normal price of potato? Normal price. If it is high, it should not be high, it should be low. Normal price is how much? What is the normal price of potato? Arpita is saying 30 rupees. Slight higher than normal is 24. Deepak is saying no, normal is 24. Navin is paying premium. Okay, Shivan, okay. Everybody, Anup is saying 20, 25. Everybody, hey, give this figure, man. Like, you cannot give the figure of potato. You can never give the figure of either shares or like, your mutual funds. 10 rupees, Santosh, oh my God, 10 rupees kidhar hai? 36 to 40 in Chennai. Rupinder is saying 20. Okay. Okay. So since we are from different part of the country, so the prices are different, of course. We know that because it's a vegetable. Okay, Kabir, it's 14.7 as per commodity market. 14.7 है, बहुत कम है, Kabir. इतना कम है. Like, this will be the wholesale price. Retail price should not be this much, right? Wholesale price or farmer point. Retail is 23. Okay, retail is 23. Okay, let us consider normal price is 25. Okay, so I'm considering 25 rupees as the normal price. This is the normal price of potato. We are discussing potato market. Okay, so this is the normal price of potato. So now potato price, can it go up to 30 rupees? Can it go up to 30 rupees? Everybody? Okay, so everybody, can it go up to 30 rupees? It can go, right? Everybody, right? A lot of people, So when it goes to 30 rupees, then what do you expect? What is the probability? Probability that it will come down or it will go up further? Everybody? I'm asking very specific question. You'll have to give me specific answer. It is at 30 rupees. So what is the probability? Probability is it will be down or it will go up. Probability, it will be down. Majority is saying probability that it will come down, right? Because it is above the normal level. Okay. So now can it goes to 40 rupees? Everybody, can it goes up to 40 rupees? It can go up, right? Okay, it can go up, right? So if it goes to 40 rupees, the probability is it will come down or it will go up. Everybody. Okay, you see, you commit mistake here. Do not commit mistake tomorrow. I am asking very specific question. The probability is it will be down or it will go up. What do you think? Okay, majority is saying that it's a probability is down. Okay. Okay, majority is saying the probability is down. Okay. Okay, fine. So now Shobhan is saying both. So now can it go to 60 rupees, 50 rupees? Yes, right? So now then the probability that it will go up or it will come down. Everybody, Shobhan. Both. Can it go to 1000 rupees? Shobhan. There is a 1000 rupees. Shobhan, can it go to 1000 rupees? Can it go to 10,000 rupees per kg? So that means when the price goes up, the probability of that means going 10,000 rupees probability is 0. No need of potato. Awesome. Got it? No need. It's a very practical thing. No need of potato. It can go to 60 rupees. Probably after that, if it goes to 60 rupees, so will you buy potato? Okay, no, man. So there is no probability. Like, so very probability is very, very less. It can go to, right? It can go to. So what happens? As the price goes up, the probability of coming down increases or probability of coming down decreases. As the price goes up, probability of coming down increases or probability of coming down decreases. Probability of coming down increases, right? As it keeps going up and up and up, the probability of coming down increases. Okay, got it? Clear, everybody? Everybody clear? Please type CLR. It's a very practical question. Do not try to think anything else. The main problem क्या होता है मालूम है? Like I have found, I came from a non-finance background and then I became very good in finance and investment. Main thing I have seen all those people, so they think too much, and in that process of thinking too much, they think irrational, illogical things. That is why they never. So I am very good at finding out the values of any company, any project, or anything, or the market. So why? Because I have seen all these people, they think too much. And in the process of thinking too much, they think irrational, illogical stuff. They always try to find out that there is something very complex thing working. No, man. That is the good news. Got it? Yeah, Kumar is saying instead I'll buy gold. Got it? Okay. So now, awesome, guys. So now, let us go downward. So we are going downward now. Can it go to 20 rupees? It can go to 20 rupees. Everybody answer. Huh? It's an every idiotic question I'll ask. You'll have to give me idiotic response. If you really want to learn. This is how we train. Small karke we train our neuron system. That is my method. Okay? And that's why people understand in my class. Okay? So if you participate, 100% you will understand. 100% 80%, 90% definitely you will understand. And a lot of people, it is 100% also. Okay? 20, right? Okay. Can it goes to 15 rupees? 10 rupees or 15 rupees? Yes. Okay. Can it goes to 10 rupees? Yes, it can go to 10 rupees, right? So now when it comes down to 10 rupees, then what is the probability? What do you think? The probability of going up increases or probability of going down increases? Up increases or down increases? Probability of going up increases or probability of going down increases? Yeah, definitely, because this is the elastic, right? So when it comes down, so we know, oh my God, 25 rupees, normally it becomes 25 rupees. Now it is 10 rupees. So what will you do? If you are a trader, and you find that potato rupees is 10 rupees, what will you do? Buy or sell? If you are a trader, so you'll buy, right? You will buy like, hey, buy potato, man. Okay. So now what to do with so many potato? We'll make chips, we'll make something. Achar, I think we cannot make. I don't know. At least like I haven't tasted potato achar, right? So we'll try to do everything, whatever it is. Okay, when the price is less, okay, that's what we do with other fruits, right? When the price is less, we try to make all these things such that we can preserve it. Got it? Got it? Alu mein se sunaya. Okay. Got it? Okay. So now, so why do you think 10 rupees is, so 10 rupees is a normal price or it's an abnormal price? 10 rupees is a normal price or it's an abnormal price? Everybody, 10 rupees is an below normal, right? It's an abnormal price, right? No, it's a not normal, abnormal price. So, okay. So now, okay, thank you so much. Sorry. Now you are saying 10 rupees is an abnormal price, but let me tell you, 10, 12 years back, 10 rupees was a normal price of potato. 12 years back, 10 rupees was a normal price. I can still remember 20 years back, we got 5 rupees potato. Okay, today 25, we find it okay. Yes or no? So that means, remember, even 2 rupees per kg, right, Rohit? Yes. So I'm giving this arbitrary, cannot remember exactly. Okay, so 10 rupees. So that means you do not know what is the normal price. 25 rupees is normal or 10 rupees is normal? 25 rupees is normal or 10 rupees is normal? But I can still remember which one is normal. Okay, awesome. Depends on time. Beautiful question. Awesome question. Awesome answer. Sorry. Depends upon the year. 25 in today is correct. Right? 10 rupees was normal 10 years back. At that point of time, if I go and if I find that potato price is 25, then oh my God, nobody would have bought potato at that point of time. So that means there is no standard normal. You don't know what is normal. Yes or no? You don't know what is the normal price of potato. Yes or no? Everybody tell me. You have no idea what is the normal price of potato. You have no idea. Simply, you have no idea what is the normal price of potato. You are just going by the trend. You are just going by the market. Everybody is saying normal. You are saying normal. Everybody is saying abnormal. You are saying abnormal. Okay. Now tell me why 10 rupees was normal 10 years back. Why 25 rupees is normal today? There is no standard. Inflation, purchasing power, awesome. Okay. Always use simple terms, simple language, then it will become easy. Inflation, I do not understand. Purchasing power also, I find it difficult. थोड़ा थोड़ा समझ में आ रहा है. I am understanding a little bit, but still I find it difficult. Can you give me some very simple way? Affordability. Salaries were low. People's earning increased. Beautiful. Because majority was accepting that price. Why majority was accepting that price? Because standard of living. Because why they agreed to pay only 10 rupees. Today they are agreeing to pay 25 rupees. Why? Because what? Because you know it. Because purchasing power means because today, so this is a statistics. Today, the top 10%, you know, what is the cutoff rate of becoming a top 10% of top 10% Indians, earning Indians? You know, what is the cutoff rate? Do you know the cutoff rate? Today, right now, anybody who is earning, what amount? Then you become top 10% Indians. So far earning is concerned. Okay. So this is rupees 25,000 per month. Okay. So if any Indian, if he or she earns 25,000 rupees per month, then he becomes top 10% Indians so far earning is concerned. Okay. So today it is top 25,000 rupees. 10 years back, it was rupees 10,000. And when people are earning, so I'm just giving like, one set just for your understanding. So when it was 10,000 rupees, then 10 rupees potato price was fine. Today it is 25,000 rupees. So 25 rupees is fine. Okay. So tomorrow means after another say 10-15 years, can it happen that he will say, sir, 60 rupees is normal? Can it happen? Can it happen that he will tell me, or in my class, same class, they'll say, okay, 60 rupees is normal? Yes or no? Okay, awesome, right? It is possible, right? 60. And at that point of time, 60 rupees is normal. At that point of time, why people will say that 60 rupees is normal price? Why people will say that? Under what circumstance people will say that? Under what circumstance people will say that? Yeah, Kumar Gaurav, awesome, right? When At that point of time, probably when they will have 60,000 rupees per month, at that point of time, they will say, okay, 60 rupees is fine. Right? Anything above 60 will be expensive. Anything below 60 will be cheap. Okay? Clear? Everybody clear? Till now clear? Please type CLR. Everybody type CLR. So ideally, clear, right? Okay, thank you so much. So ideally, the potato price under a perfect situation, the potato price, suppose there is no fluctuation, it's a very stable economy, absolutely 100% stable economy. That means under such circumstances, potato price should go up every single day. Okay, because every single day, thoda thoda paisa. So are like, things are improving. Okay, are like, whatever, because of inflation or because of non-real growth. Okay, whatever it is. But our income is increasing slowly. So similarly, logically, under a perfect situations. Okay, so in economics, those who are in economics, if anybody has studied economics, we always hear that, right? Under perfect situation, right? So under perfect situations, every day the potato price should go up. Yes or no? Under a perfect situations, because it's ultimately increasing. So every day potato price should go up. Yes or no? Everybody. That's right. Yeah. Okay. So potato price should reach new high every day. Yeah. But if salaries go up too, yes, Kabir, awesome, man. Beautiful. Okay. You are going to understand, right? You have already got it. Okay. So that means every single day, but that is the assumption, as I told you, Kabir, there might be increase in real growth or there will be inflation, either of these two or both. Our incomes are increasing. Okay. It might be only inflation. Okay. That also may happen, or it might be both, or it might be just one, the actual growth. Okay. Whatever is the situations, things are at least the number is increasing. Number is increasing. So that means every single day potato price should move up. Every single day. Some paisa. Might be very small paisa. Okay. So every single day potato price should touch new high. Yes or no? Under a perfect situation, every single day potato price should touch new high. Yes or no? Everybody. Yes, right? Okay, so now touching new high is not an abnormal thing, it's a normal thing. Okay, so now we see entire situation in this entire scenario. We don't know what is the normal price. Okay, this is increasing, this is also increasing. Okay, so this is increasing, this 10,000 rupees. Let me make it blue. Okay, this is increasing, this is also increasing, right? This is also increasing, this is also increasing. And of course, potato price is increasing. 10 rupees, then it has become 25, then it has become 60. So now nothing is stable. But in that whole scenario, one thing is stable. Can you find out that? All students, please do not respond. All the senior students, please do not respond. Senior student, please do not respond. Only the new student, let them respond. Inflation now, I'm taking a look. Inflation is constant. Curve is going up. Okay. Okay, so you are thinking in a right direction. Can you make it simple? So I want something where it is stable. I can see very easily, okay, this is stable. Everybody is thinking properly, but can you give me some number? Price increases. Okay, but price increases like sometimes go up, comes down, go up, comes down. Karke. But one thing is, in these three scenarios, one thing is constant. What is constant in this three scenario? I have given you three scenarios. In these three scenarios, one thing is constant. Income is increasing, potato price is also increasing, but both are increasing. I think one thing is constant. What is that? Proportional. Kabir, awesome, man. Understood? In this case also, the price, potato price, okay, I'm saying price and income, 10 by 10,000. 10 by 1,000, sorry, yeah, 10 by 10,000 is equal to 1 by 1,000. In this case also it is 25 by 25,000 is equal to 1 by 1,000. In this case also it is 60 by 60,000 is equal to 1 by 1,000. Clear, everybody? Please type CLR. Okay. Okay, awesome. Thank you so much. Thank you so much. Okay, so now please understand one thing. We do not say potato price goes up when it goes up from 10 to 25. We say it is normal. We do not say price is going up. We say price goes up when this ratio goes up. Okay, when it becomes 1 to 1,000, when it becomes more than that, then we say, oh my God, price is very high. We are earning 10,000 rupees, price has become 20. When this ratio comes down, then we feel comfortable. Okay, so this our comfort level so far potato is concerned, it depends on this ratio, not in price. Price will, of course, it will move like this. Okay, थोड़ा सा अलग सा कलर यूज करते हैं. Okay, but this does not matter. This is not important. When it comes from 10 to 25, we didn't say that prices, oh my God, this is very high. We didn't say that. We say that when this ratio is up, when the ratio is up, it becomes unaffordable. It becomes unrealistic. It becomes abnormal. Not when the price goes up. Okay, the ratio goes up, it becomes abnormal. The ratio comes down, it becomes affordable. Ratio goes up, ratios goes down. Okay, so now new high is not important. New high, it should be under perfect condition. Every day it should create new high. But the thing is that if it exceeds that ratio, then we found that it is high. The price becomes high when the ratio is high. Okay, clear, everybody? Clear? Anybody has any question? Type CLR, everybody. Okay, I'll show you. Don't worry. Anybody has any question, you can ask me. Yeah, right. Okay, Kabir, thamba, Kabir, thamba. ठीक है, बहुत दूर है. Okay, as per this we buy sell, of course as per with this buy sell, but thamba. Okay. Okay. So but the thing is that, okay, so you have some do you have some past investment experience, Kabir? Do you have any past investment experience? No. Okay, so this is the reason you are catching it very clean way. Okay, I have been observing it. Your answers are because your experience is not yet polluted. Okay, not polluted. I should say occupied with some wrong knowledge. Okay, or some half-baked knowledge. That's why you are picking up very quickly, beautiful way. Yeah, and that's why I tell, right? I think, and I told these things when you join this, like some few people. So I have no experience, right? I think you might be one. I don't know. A lot of people ask me this. So I have no experience at all. Shall I understand? And I keep saying, if you have no experience at all, if you are completely new, you are in the business. This is the reason, because what happens, since you are not, your neuron system is not occupied with preconceived ideas, preconceived knowledge, which is quite often wrong and half-baked. So what happens when we talk logical, you can catch quickly because it's open slate. Okay, there's nothing written. Okay, slowly you will understand everything. Okay, you are in the right direction, Kabir. Okay. Okay, how will we find out ideal price earning ratio? Don't worry, Ritesh. Okay, good, Ritesh. You have, like, today is a working day, but still you are here. I thought you are gone already. Okay, thanks. Don't worry. So we are going ahead. Okay. Anybody has any question regarding this, you can ask me. I'll tell you what we were thamba. Thamba means wait. Okay. Thamba is a Marathi word. So like, and if it is, if I need to I need to explain, I'll explain it immediately. And if I think thamba, so I will tell you thamba. Okay. No question. Okay. Let me test you. Okay. Can I test you? Can I take a test? Sure. Okay. How many of you are, like, completely new in investment? Afraid? Don't worry. Okay. Please type I. Those who are completely new in investment. Santosh, Inito, Kavir, Arpita. Okay, awesome, man. Kumar Gaurav, okay, beautiful. Anup Solanki. Okay, Anup, you are also. Oh, you have you had SIP. Okay, okay. SIP means you have some experience, some knowledges, right? At least, like, you have got some. Okay, don't worry. Okay, so we'll make it clear. Don't worry. Okay. थोड़ा सा earlier experience will bug you, earlier learning, earlier experience will bug you a little bit, but it will be, by the time we are through, by the time today we are through, it will be completely clear. Okay, you will understand each and everything. Okay, so let us understand. Okay, awesome it is. So now, have you heard about Sahara? What is that? Sahara. Yes, what is that? So it's a desert, right? It is desert I'm talking about, not that company. Okay. So Saharan desert is it's the biggest, number two, and it is in Sahara desert is in Africa, right? Saharan desert is in Africa, and the second biggest desert is Gobi Desert in China. Okay, so now Sahara is a famous place because it is the biggest desert and a lot of people go there. A lot of tourists, they go there, and then what they do, so they cross that desert, not by car or something. They take like camels and food, etc. It's an adventure. Those who are adventure loving people, so they do that. The way all these earlier days people used to do, same way they do that, just to feel the adventure. And it's like, desert. If anybody has any experience in desert, staying in desert overnight or over 2-3 night, anybody? Okay, Kaviri, you have got, okay, so you know it, right? So now it is, of course, I don't have that much experience with desert. I have experience with the hills. Yes, in Rajasthan. Okay, so you know, right? During daytime, it is super heat, and during the nighttime, it's so cold. Okay, so this is how the desert is. It becomes extremely cold during night, and it becomes extremely hot during the daytime. So this is a big challenge, actually, when you are crossing a desert like Saharan desert. So they collect some vegetables, which is an underground vegetable. It's a kind of yam. Yam means हम लोग का पास इधर, like, yam होता है ना, right? RV, and then colocasia. Okay, scientifically we call it colocasia. So RV. Okay, it's the is the underground vegetable. So that vegetable is a lifesaver out there. Okay, it's a yam. That vegetable, because it is lifesaver, because it has got a lot of waters and it has got protein. So these are the two very essential things. One is the source of protein and water. So this vegetable gives that. So you carry vegetables and then there are both of them. So everyone who crosses Saharan Desert, for them this is essential. They will have to carry that vegetable. Now, the price of that vegetable is $75 per kilo. Okay, and you can do trading through net. Now today, so this is, without that people will die. It's a lifesaver. Definitely, like if somebody is walking and he doesn't take that, then people will die. So now this lifesaver, now this is available at $75 per kg. Now today you are here in India or in Gulf, wherever you are, or in Singapore. Anybody from Singapore? Anybody from Singapore? I think it is difficult, right? In Singapore means 12. This may 11, like, of course, a difficult, I think. No. Okay, no issue. I think nobody is from Singapore. Okay, so now, so you are in India. I'm considering all are in India because all of us are Indians only ultimately. And then you have a choice. Will you buy or you will sell it? Everybody answer. Whatever comes to your mind, okay? $75 is available right now. It is $75 and it's a lifesaver. Everybody needs that to cross Sahara. So you will buy it or you will sell it. Why you will buy or why you will sell? All those people, why you are thinking? You are not in Sahara. Sell if surplus. Okay, it's a lifesaver. That's why you will buy. Because you are not in desert, so you will sell it today. Short selling limits. You can do buy, I can sell. Okay, whatever. Sell because in India it is not needed and available in surplus. No, you can retail, you can do trading. You can do trading through like share market. So like retail, you are in Gulf, right? Somewhere. Which place, whatever, Dubai or whatever, Oman or whatever, right? So you can buy and sell shares in India. Same way you can buy and sell this yam from India through screen, through computer, through net, but it will be traded there. Yeah, getting it. So that's how you take a decision. Okay, we'll hold, buy, sell. Okay. Okay. Arpita is so that I can utilize it for usage or savage. Okay. What else? I start cultivating. Okay. Kumar. Okay. So now share kharidna nahi hai, like me. Who will buy shares? Okay, let me start a company. Okay. Buy then as it is lifesaver and everyone will need it. Okay, awesome, Ritis. Rohit, buy because later the normal price will be high. Okay. So now how do you know, Rohit, that the normal price will become high? Value of share would increase with limited inventory. So how do you know that? As it is lifesaver, you will hold. Shobhan. How do you know that? How do you know that? Demand and supply. So you know that demand and supply of yam. We'll check the ratio. Do you have that ratio? Arpita, you know the demand of yam? Somebody is called lifesaver. You see, it's a lifesaver. You see, water is lifesaver. Okay. And when you go, like, we are Mumbaikars, we go to, say, Goa very often. Whenever we get a slightly long break, we drive down. It takes around 11 hours. I think nowadays it takes lesser than that, whatever it is. And while going from Mumbai to Goa, so you need water. It's a lifesaver. Okay, because otherwise, of course, you will not die in 11 hours or 12 hours, but your condition will be very, very difficult. So thinking that some of us decided that since it is a lifesaver and people are going from Mumbai to Goa, at the beginning of the Mumbai-Goa highway, somebody is selling Bisleri water at 1000 rupees. Will you buy it? Because it's a lifesaver. It's a lifesaver, man. Without water, you will die. No? Why no? Why no? No, buy it from, we'll buy it from, yeah, Deepak Awesome, we'll buy it from Dadar. I drink from Bandra. Okay, it is overpriced. Will not die in 11 hours, Shovan. Is it the reason? Will not buy at 11 hours. You can buy at least one bottle such that you can reach Goa. I'll carry from home. I'll make my own arranges because it is available elsewhere cheaper. Are you getting it? You know that water very well. You know the price of bottled water. You know the availability of bottled water. Okay, that is why you are not taking any decision about that the water bottle being sold at the start of the Mumbai-Goa highway quoted at 1000 rupees per bottle. Yes or no? Everybody, yes or no? You are not taking any decision because you know everything about water bottles in India. Okay. So now what will you do with that Sahara Niyam? Will you buy or sell it? You will buy it or you will sell it in Sahara Niyam. What will you do? You will sell it. So you know the price is high. Awesome. Okay. Okay. Ritesh, beautiful. Rohit, awesome. What else? One buy, one sell. Yes, we will do nothing, man. We don't know. We don't understand Sahara Niyam market. We have no idea. We don't know anything about it. We will do nothing because we don't know anything about it. We understand potato, we will buy and sell potato. We understand Bisleri water or any bottled water, we will buy that bottled water that we understand. We will not go to Sahara Niyam market because we don't know what is it. Arpita, there are people who are there in Sahara, they understand the Niyam. So they will do that. From here, if you understand it, definitely you do. Okay, but you do not understand, right? Sticking to what we understand is the important. Whatever we understand, we will buy and sell that. If we don't understand, we will not go there. Do not go to Sahara Niyam market. Okay? Never ever go to Sahara Niyam market. You can make money by buying and selling what you understand. If you go to Sahara Niyam market, some of you are say buy, some of you are saying sell without knowing anything about it. That is called gambling. That is not investment. It is not even trading. That is pure gambling. You are not very sure. In case of potato, you know 10,000 rupees is our income, 10 rupees is fine. 25,000 income, 25 rupees is fine. You know it. You don't know anything about Sahara Niyam market, do not go to Sahara Niyam market. Clear, everybody? Everybody clear? Always remember these things if you want to be successful in investment. Okay? Even after knowing this, I lost crore of rupees because I ignored it. Right? Last crore of rupees, 2016-17. 16. 1 crore rupees I lost. Kabir and Nisa, just a question, doesn't opportunity cost come in factor? Opportunity cost come in factor when you understand it. Okay? I am giving one opportunity. I have written here something extremely valuable. One opportunity, only one paper. What price will you buy this? Only one opportunity in life you are getting. I am writing something here. Okay. Kumar Gaurav, you'll have to watch the. Okay, yes. Got it, everybody. You need to know. Kumar Gaurav, you please watch the recording once again. Okay. After that, answer it. Got it clear? I think it is already 2 hours, 10:30, 11:30, 12:30. So should we take a short break? Then after that, lunch break. Later we'll take. Clear, everybody? Clear, right? So do not gamble. All these opportunities factors, it depends on your learning only, your understanding it. If you do not understand, so it has no value. Okay, maybe for you it might be opportunity, may not for me, so I won't buy. Yeah, so awesome. Okay, beautiful. So what is saying, I'm repeating it, maybe for you it might be opportunity, it may not be that same for me. Beautiful. So I won't buy. Okay. So now somebody is like, yeah, there are so many examples, such examples are there. For somebody, it might be an opportunity. For me, it is not. It may not be for me. Understood? Kabir 2,000 rupees and then sell Xerox of it 1,000 years ago. Awesome, man. Okay. Okay, clear. Okay. So now, can we take, say, how many? Like, for a cup of tea or coffee, how many minutes do you need? So bio break and cup of tea or coffee, how many minutes? We'll have a dinner break somewhere around 1:30, 1:45. That's fine. 10 minutes. 10 minutes is fine, I believe, right? 10 minutes. Let us do 10 minutes, okay? Let us do 10 minutes, okay? So 10 minutes break. Then after that, we'll be back again. Let me play beautiful guitar music for you. So this is how long it is. Yeah. The biggest lie in the world of stock markets is volume. You've been using it all wrong. Okay, 10 minutes break and break will start. अरे apps किधर गया? Apps. Are you guys ready? Back. 28, 29, 30, 31. 3 people missing. Okay. All of you guys back. Back. I'm back. Anybody has any question before going ahead? Anybody has any question? Please make sure that it's crystal clear, because things will be building on this. Whatever we have been covering, as you have seen, like we keep on building on whatever we learn. Okay. So now that's why you need to make sure that your foundation means till now whatever has been done, that is crystal clear. Okay. So from here we'll keep on building and building and building. Okay. Anybody has any question? No question? If there is no question, then I am going ahead. Okay. So now there is a shop. Okay, let us come to practical. There is a shop, not practical, semi-practical. Okay. Okay. Vegetable market we have discussed a lot. So now there is a shop. That shop is a very old, what is called vintage shop, you can say. That vintage shop, normally in Mumbai, there are a lot of there. One is the Britannia restaurant. It's a very simple restaurant, but it's vintage. People go there because it's vintage. It is like pre-British era, British era only. Yeah. So now that's the characteristics of that shop is whatever it is, whatever is the situation, this shop will give you 1 lakh rupees net profit every year. I'm keeping it small, say 1 lakh rupees net profit at the end of the year, you will get 1 lakh rupees year. Okay, I'm keeping it small such that calculation becomes easier. Now that particular shop is up for sale. Okay, so now obviously it is up for sale. It's a big thing that this such a vintage, so old shop and so popular shop is up for sale, and there is the characteristics, and there are bids going on. So we'll have to bid for it. Okay, so let me pictorially make it such that it becomes easier for us to understand the situation. Okay, this is the shop. ये normally पुराना shops ऐसे होता है, right? हाँ. Say this is the shop. Okay, and this shop is up for sale, and characteristics, what is the characteristics? So for finance is concerned, this is the characteristics. It will give you net earnings of 1 lakh per year. Okay, this is the characteristics, big characteristics. Okay, this much of information we have right now. Okay, so this is the information we have, and based on that, so now this is up for sale, and we'll have to buy this. We'll have to give our bids that at this price we will be buying this particular shop. Now you tell me if this information is available, only this much information available with you. At what price will you buy this shop? How much bid you will go for this shop? Give me your figures, everybody. This shop, very famous shop. Might be it is bigger than this. Okay, might be it is bigger than this. Okay. Okay, like this. Okay. Okay, you cannot decide. Okay, HP is saying full 5 lakhs. Suppose based on this information, how much will you bid? Based on this information, I am saying HP 5 lakhs. So HP is giving 5 lakhs. Definitely, only if you give more than 5 lakhs, then only you will get it. But that's okay, since it is a learning. Only based on this information. This is guaranteed. This is guaranteed. Now let me tell you, assure you, this is a guaranteed. It has been giving 1 lakh per year. It will continue give you 1 lakh per year to your kids, to your kids' kids, to your kids, it will continue giving 1 lakh per year. At what price will you buy this? HP is saying 5 lakhs. Anup is also saying 5 lakhs. Okay. I have to bid then 5 lakhs. Okay, Anup. Everybody bid. Give me more than 5 lakhs or less than 5 lakhs. Because in case HP and Anup, okay, मैं दोनों लिख देता हूँ एक ही side में, then it will be. If they refuse, then it will go to somebody who will be giving HP, Anup, both. Anybody more than this? 5.01 lakhs. Santosh, okay, you'll have to increase it by 1 lakh only. Or say 2 lakhs only. Somebody, please bid. I want to see how you think. That is why. Now only this much information is available. And this is a guaranteed 1 lakh per year. This is guaranteed. So how much will you ready to pay for this shop? Think and then tell me. Okay, Deepak, give me the 8 lakhs. Awesome, Deepak. Deepak is saying 8 lakhs. Less than 5 lakhs is also fine. In case HP or Anup, they refuse to buy, then it will go to you guys. Have to check first why he is selling. Shobhan, it's just like he's become old and it has been going on. Like, you see, like, Kolkata, there are biryani houses which was started by the the chief of Nawab. I think Siraj was chief of Nawab. So he started that. And still it's going on. Okay. Chef is gone long back. Okay. But that biryani house is still there. Okay. I think this is the story of Siraj. Okay. Now tell me, I cannot invest 5 lakhs and wait for years to get the capital. Okay, Rohit is saying 4 lakhs. Okay, I am writing here, Rohit. Okay, who else? Don't worry about the I'll finance it if you can justify. Okay, Shobhan, I'll finance it. You just need to justify. How much? More than 8 lakhs? Anybody is paying more than 8 lakhs? 1 lakh guaranteed return you are getting every year for generations, after generations, after generations, after generations. You will continue getting this. Naveen is saying 12 lakhs. Okay. Who else? Himmat karo thora. 12 lakhs. 5 lakhs and 5 investor. Kabir is 5 lakhs. Okay. 5 lakhs ticket. So I am here, he will answer. So I am considering that he will give 5 lakhs. Anybody more than 12 lakhs? Anybody more than 12 lakhs or anything? Anything other than these numbers? So you must be thinking something. So what is your thinking? What are you thinking? And how are you transforming it into numbers? I need to understand that. Okay? Rupinder, this is the figure is in front of you. 1 lakh rupees per year. Then you do your calculations. Whatever calculations you have to do, you do it. And you tell me the figure. Because you see, I am an investment banker appointed by this guy. Okay? So he said, okay, hey, I need to sell it, please sell it at the best price. Okay, so I am investment banker. Now I am here selling it on behalf of this, and this is the information available. Nothing else. So you'll have to tell me price. Whoever is giving me price, he will get it. Rupinder is at 10 lakhs. If I get 1 lakh, then it's like 10% ROI forever. Okay, Rupinder, awesome. So between Deepak and Naveen, there will be Rupinder. Beautiful thinking. Okay, so love it, man. 10 lakhs. Okay. Okay. So now, okay, I think if you are not bidding anyone else, thinking something, whatever you are thinking. You see, when you are giving bid to the fund manager, to the investment banker who are placing the bid, you do your research, you do your calculation, you just mention the amount that this much I will pay. Okay, so you cannot give the logic. Okay, so you'll have to give the price. Okay, this is the price. And what is the information? This is the information. Your generations after generations after generations will continue getting 1 lakh rupees per year. Okay. Over. No one is bidding. Anyone is bidding? Anyone is bidding or no one is bidding? Okay, so let us come one by one. Now first come Naveen. Naveen, 12 lakhs rupees. What is the logic? 1 lakh is fixed. It won't grow. It won't grow. Kavir. 1 lakh is fixed. Earlier also it has been giving 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh, and it will continue giving 1 lakh, 1 lakh, 1 lakh, 1 lakh. Okay, this is fixed. Think Kavir. Okay, rental yield fixed yearly income 1 lakh per year. In this case, capital appreciation increase in shop value over time. Okay, so Naveen has analyzed that way. Rental yield, there will be fixed yearly income 1 lakh per year and capital appreciation increase in shop value over time. Okay, so Naveen, you are comfortable with 12 lakhs, right? So now you are assuming that there will be capital appreciation, and since 1 lakh rupees fixed dividend you are getting, so you are happy with this. You are happy with this, that 1 lakh, so 1 by 12. 1 by 12, that means what is the percentage? 1 by 12 will be, what is the percentage? Point, how much? 0.8 something, right? 0.8 something. So 8%, 8.33%. So 8.3% dividend yield plus capital appreciation, and you are happy with that. Okay, so Naveen, okay, fine. So Naveen is given like, given this figure and he's happy. Now, okay, so let's see. Rupinder, what is the logic? 10 lakhs rupees. What is the logic? 10 lakhs rupees. Whatever you are giving the logic, that's fine with you. Okay. What is the logic, Rupinder, for 10 lakhs rupees? Fixed income with 10% ROI. So you are happy with 10% ROI? You are getting 10% ROI. You are happy with that? Okay, yes. But if you invest somewhere else, you may get, in fact, 15%, 20%. Same amount with knowledge. Still you are happy with 10 lakhs rupees? This is assured. Yeah, this is assured. That is true. This is assured. Okay, so you'll go ahead, right? You'll stick to it. Until and unless Naveen, of course, it will go to Naveen. In case Naveen drops out, then you will get it. It will come to you. So you are ready for that, right? Okay, beautiful, awesome. Like, all are approving, nobody is dropping out. Deepak, 8 lakhs rupees. What is that? What is the reason? Deepak, 8 lakhs rupees. What is the reason? How do you calculate it? What is your mind? What is the logic? Anything, any logic is fine. If it is illogical, then I'll tell you, okay, this is not logical. Whatever is coming to your mind when you are giving this bid, so there must be something, right? Something is that. That's why you are giving 8 lakhs rupees. What is that? Deepak, are you there? I get 15% return and hedge the inflation by increase the revenue after few years. You see, increasing the revenue is not in your hand, because it has been going on like this and it has that capacity. So right now, this information is not with you. 12%, 15%, that is with you. But the rest of the information you don't have. Okay? Because you don't know. It might be in a situation that there is no way you can increase revenue. That capacity is full pack. Appreciation will make me good. Okay, fine. So you are also fine. Okay, 15% return. So you are also fine. Anup and Rohit, of course, you will not get this because already there are a lot of people. Naveen is giving 12 lakhs, he will get it. And even if he drops at the last moment, then Rupinder is there, then Deepak is there. But still, why 5 lakhs or 4 lakhs? All those people, Anup, break even in 5 years. Okay, awesome. Awesome, like a beautiful thought process, right? You are thinking it's not called break even actually. Let me correct you. So people do confuse it. It is called payback. There is a difference. Break even is always operational. Okay, payback is capital. So when it comes to payback, then it becomes capital. Okay, when it comes to capital payback, then that is called payback. Break even is always operational, right? And a lot of people, since they do not understand, they confuse it. But anyway, it's okay. You have understood the concept. Okay, that means 5 lakhs will be payback. So you'll be getting back your 5 lakhs rupees. After that, profit ही profit. Okay, beautiful, awesome. Now Rohit, what did you think? Rohit, what did you think? Rohit, recovery of amount faster as income of 1 lakh per year is only known information. Awesome. Beautiful, beautiful, Rohit. Like, I respect it, and you are thinking rationally. That is the most important thing. Okay, the most important thing that you are thinking rationally. You are not doing irrational thinking. That is the important thing. Okay, what is good, what is bad, what will work, what will not work. That is the later stage. Okay, beautiful. So you want, then in 4 years only you will be broke even. You will break even means you will get the payback, get the capital back. Then after that there is a profit. Okay, beautiful, awesome. Okay, so now obviously since nobody dropped out, definitely Naveen will get this. Okay, so when Naveen get this, then it becomes a news, because it's a big thing. So how the news will break out? The news will break out like this. Next day in the newspaper, you will see there's a huge breaking news that Mr. Naveen bought this company, this building, like this vintage building, not building, vintage shop, or at a price to earning ratio. In financial newspapers and in financial news channels like CNBC, etc., that's how they will report. Price to earning ratio. Price is 12 lakhs and earnings per year is 1 lakh per year. So what is the price to earning ratio or PE ratio of how much? What is the P ratio? What is the P ratio? Everybody, what is the P ratio? Everybody, what is the P ratio? P ratio is 12. Okay, got it clear? P ratio is 12. Okay, so now what happens? Now Naveen has already bought it. Bought it means like it is being finalized. Then after that goes Ambani sends his team. So jaake dekh ke aao, what is that? They come and they visited this place and they find out that these guys they're using very old management system. And if they improved if they tweak the management system, if they implemented new management system, easily this earning will go up to 3 lakhs per year. Okay, so now when they know that it will go up to 3 lakhs per year, how much Ambani will quote? What do you think? Give me a figure. Whatever you are thinking, as per your thinking, how much they will quote? Logically 36 lakhs. Okay, going by this 36 lakhs. Okay, but they will not disclose everything. They will keep something for them also. So probably they will, probably they will quote say 24 lakhs or something. Okay, so now in that case, price will be 24 lakhs and earning is how much? Earning is still, it is not 3 lakhs. They are expecting that. It is a forward earning for them. Okay, please remember, 1 lakh per year only. Okay, earning is still 1 lakh per year. 3 lakh they are expecting. It's a forward looking. Okay, so now what is the P now? What is the P now? What is the P now, everybody? P is 24. Now P is 24, and then everything is in the newspaper next day. Hey, you know what? This now Ambani overbids Mr. Naveen and they are going with 24 PE. So that becomes news. Okay, so next day what happens? Builder, Lodha comes. Okay, and Lodha finds out that, so the way they look at it, it's a different. They are not looking at how much profit will be and all this stuff. So they have seen the future prospect of the entire geography. Okay, and they find out that this entire stuff is going to transform in few years. There is some new big infrastructure is coming up, and this shop they can easily transform into a small shopping complex. And if they transform it into a shopping complex, just investing a couple of lakhs rupees, they will be able to sell it at say 80 lakhs rupees very easily. So how much they will quote now? They know 80 lakhs rupees they will be easily sell out. So how much they will quote now? Give me any figure. 50 lakhs. Okay, say 50 lakhs, 60 lakhs. Okay, so I'm going with 50 lakhs. 50 lakhs, and earnings are how much? Earnings are still 1 lakh per year. Okay, so P is, what is the P? P is everybody, P is 50, right? Now next day, this is the news. The Lodha is buying at PE 50. Neither Ambani has any idea why these guys are buying at such a high price. Nor Navin, nor us. Nobody has any idea. When Ambani bought, like we are shocked what they can see that they have increased their price to that much, double. And now Lodha, what they have seen that they have increased the price to 50 lakhs. Okay. So now what is the takeaway? What is your learning from this exercise? This is the most important question. It's an everybody answer it. What do you learn from this exercise? Okay, vision. Had a P list the profit yearly. Okay, PE increasing. Okay. So what decision? So far decision is concerned that okay, this is a big learning and I will do this, I will not do this. What will you do? What will you not do? Okay, this is practical answer. Practical answer means I have learned so many things. Now I will do this. Now I will not do this. Okay, so this is a practical implementation. What is that answer? Anything, any nonsense answer is good. Okay, just a moment. Rupinder is saying every person has different valuation. Bot is important. Okay, okay, just a moment. Every person has different valuation of same thing. Beautiful, Rupinder. Okay, so now what is out of that? What is your action? What will be your action? Okay, that is important. Long-term vision of the anything bot is important. Okay, financial strategy. Okay, with more information and expectations, you get better decision making. Awesome, Ritesh. So now what will be your decision? What is your decision today? You know that. You have understood. So that means from today onwards, I will do this. From today onwards, I will not do this. What is that? I am more interested in that. This is the learning. What is the course of action now? Bhavik, what determines the price in market is perspective. Okay, awesome. When PE less, will buy. Okay, beautiful, Santos. When P is less, you buy. But biggest challenge is we do not know what is the actual PE. We thought 12. Navin thought 12 is actual PE. Deepak thought 8 is the right PE. Anup thought 5 is the right PE. Rupinder thought 10 is the right PE. Ambani thought 24 is the correct PE. They can make money. Lodha is thinking 50 is the correct PE. They can make money. Okay. Kavir, I should know the value of the opportunity. Beautiful. Buy and offer to big investor. Okay, gather as much as information about the things to buy before buying it. Anup, beautiful. Right? Just somebody is saying, so we should not go into it. We must gather as much as information about the same thing. Same as Sahara Niyam market. Okay? Got it? Beautiful. Buy share of Lodha. Okay, so on. But you don't know. This is something, same thing happened. Okay, there's a story, small story. So when Tata bought Coras, then there are some analysts, including me, I said, okay, it's a wrong decision. And Tata had a very difficult situations after buying Coras. because they bought it at very high valuation. Similar thing will happen with this windmill company. Okay, in fact, a lot of people criticized me. I was an analyst out there. So I wrote a negative report. No, not report, note. Note means like, they go personally here and there. Report means proper research report. So I made a negative note on that. A lot of people did not like me. Okay. So did not like me because that creates negative ripple in the market. Okay, so that's why. But the thing is that ultimately, whatever I said, that appeared to be correct. Okay, so now that's why. So what do we mean to say? It's not necessary that Lodha is buying this. That means that's why you will buy Lodha. Not necessary. Okay, please remember this. It is fruitful if they can manage to buy at a lesser price and if you know it. Okay, same way I knew that Tata did not buy Coras at good price. They gave a very high price, extremely high price they gave. At that point of time, the steel was at the peak because of Chinese Olympic. Okay. Suzlon, yes, Suman. Thank you so much. Okay, Suzlon, yeah. Retails for investment decision making buy when you think the PE ratio is low and expectations are directed towards growth. Okay, beautiful. You're beautiful thinking. Beautiful thinking. Okay. But the thing is, it is extremely difficult to understand what is the correct PE. Yes or no? तो क्या करे? क्या करे? अभी potato price जा रहा है. Whether potato price is high or the onion price is high or the tomato price is high, it's very difficult. Okay, we don't know what is happening in the potato. We don't know what is happening in the tomato market. What is happening at the farmer level? What is happening in the transformation, what is called, like, transportation? What is happening in diesel price? So many factors. But we cannot go to Saharan market, right? So what to do now? We'll have to take a decision. Okay, awesome, Manu. So that's why we can look at the average PE. And average PE is given by PE of the, tell me, man, tell me. Everybody, average PE will be given by PE of the index. And that is the exact reason we look at only index PE. Okay, because it's an average. There might be some aberrations. That is 100% sure. It's not that you can be 100% correct in the market. But we reduce our risk significantly by going average. When everything, potato is also up, tomato is also up, like we know that entire market is up. Even if we do not know what is happening in potato, what is happening in tomato, what is happening in cauliflower, even if we do not know, but when the entire index is up, we know that, okay, now entire market is like this. There will be 100%, there will be aberrations. We cannot get rid of it. So that is the reason we look at only index valuation, index PE. Now there are so many other valuations. PE is the simplest valuation. Everybody can understand. You understand. Okay. That's why we are following this. Until and unless you understand the other valuation, do not follow. It will be Saharanian market. You understand PE, follow PE only. Nothing else. And out of these two, we have got two indices. What are these? We have got two indices, main indices, broader indices that represents the market. Nifty and everybody, Nifty and Sensex, right? Nifty and Sensex. Okay. So now either of them we can follow, but we have got data about Nifty. You can follow Sensex also. Right? Please remember, because a lot of people get confused. Okay, why no Sensex? You can follow Sensex also. But since data is available for Nifty easily, we will follow Nifty. And nowadays there are a lot of websites, they give this data. But since I have been using one particular website, they have been like giving data for so long, I am going to show you that website right now. Okay. Anybody has any question? Anybody has any question? No question. All are ready. Now we are going to the most practical part, slowly. Okay. From vegetable market to semi-market, now real market. Ready, everybody? Everybody ready? Yes. Give me yes, man. Ready, type ready. Everybody type ready. Ready, Thorasa. Yes is very easy. Okay, right, ready. Ready, yes. Santosh Kumar, yes. Board is coming. Okay, yes, sir, ready. Beautiful. Okay. So now, okay, awesome. Hey, what about others? All others are not ready? Others are not ready or what? Not ready? Ready? Okay, thank you so much. Okay. So now let me share this. There we go. Okay, so here, right now, please do not open website. I am repeating again because I know there are a lot of enthusiastic people. Please do not open your website. Watch how I do the analysis. Once the class is over, after that, you do your research. Because earlier also I find it many times what happens when I start describing. So people, they start doing on their own. Then at the end, they come back and they say, I have not understood at all. Okay, but thankfully some of these guys were honest enough. They said, okay, I was looking at it myself. Okay, at least I'm thankful I know why they didn't understand. So please do not do that. Just remain glued whatever I am showing you. Okay, you do not understand something, you ask here. Do not try to do your own research right now, right? Because this thing is going to be slightly deep. If you do it right now, if you start doing it yourself, then it's 100% sure you will not get anything. Okay, so I am using this. This is already there in our video session. It is there, but we are going deeper today. This is Nifty, Nifty dash PE dash ratio.com. Nifty dash PE dash ratio.com. Okay, so now I am showing you this data. So this is the website. In videos, I have only explained these colors because in videos it is difficult. We cannot do such kind of learning. It's not possible in the videos, right? So I am keeping it simple. And moreover, we since at that point when I started it, at that point of time, there is no concept of workshop. So I gave this much only. So now since there is a workshop, so I can go deeper. So that's why I am taking you deeper. So we do not see this. We see this chart, Nifty PE ratio line chart. Now do not go deeper all this stuff. Okay? We don't know. We don't understand all this. So we'll stick to only Nifty PE. Okay, so what we are going to stick to, please type everybody because this is important. Otherwise, after some time, you'll ask me this question again. We are going to see only one. What is that? Only one data we are going to see. What is that? Everybody type. Everybody type. Please type everybody. Everybody type. Everybody. Which PE? Which PE? Which P? Because you need to be 100% sure. Because I know some of you guys again going to ask me on Monday session. And let me tell you, Minal, are you there? Minal, are you there? Minal, are you there? Minal, are you there? I think she's not there today. So Minal is one who committed that mistake. Based on this, she started buying stocks. It will not work that way. Okay. So please be careful, be fully attentive. So see, bought stocks based on this research and it doesn't work that way. Okay, so it will be exactly whatever I am saying, it will work this way only. Okay, and you'll have to see only Nifty PE ratio. Okay, so now you see What is this? This blue line is the Nifty PE. And this orange line is the actual Nifty. Like potato price, you will always see this keeps going up and up and up and up. It will continue going up, right? Since we have growth, it can be real growth, it can be only inflationary growth, whatever it is. If either of these two present, then definitely it will continue growing, going up and up and up only. Okay, but if you are thinking that, okay, now it is 1696, everybody, those who bought at this level, they made money, they made only 5% or less than that. Okay, it doesn't work that way. That's why we need to look at this. Okay, so now you see this blue is the PE ratio. Same way. Okay, here potato price. But the thing is, this ratio, it always remains within a range. And this ratio decides whether the value of potato, whether the price of potato is good or not good. Okay, so now this blue ratio, now you see this ratio always fluctuates. Okay, but the thing is, this orange color, this absolute Nifty keeps going up and up. So now you tell me, what is the median of this ratio? It always fluctuates around its median. What is the median of this ratio? Everybody, can you see it? Median of this ratio is everybody. Median of this ratio is everybody. Can you see this median of this ratio? Hey, you guys are there or not? See, this is the most important part. This is the crux of the entire workshop. It's 20.85, right? It's 20.85. This is the median. That means we have seen this Nifty, this ratio, it remains around that level only. Okay, 20.85. So right now, what is the P of Nifty? Right now, what is the P of Nifty? Can you see this? Right now, P of Nifty is around, this is the median is 20.85. Okay, zoom a little. Okay, just a moment. You see it now? Oh, yeah, this is the problem. Like, this chart is like, this happens. Okay. You see it? It is, yeah, 21.95. So now, what do you think? It is an overvalued or it is an undervalued? Nifty is right now overvalued or undervalued? Okay, it is a more than average. Okay, slightly overvalued, actually, we can say. Okay, it is a overvalued, but slightly compared to median, yes. Okay, slightly overvalued. Okay, awesome. Okay, are you getting it? So this is how the valuation happens. Okay, so now let us go deeper. Now you can see this Nifty always trades. This Nifty always trades between, you see, most of the time, it remains within this range. Okay, it remains within this range. Now you see, I told you about dot-com bubble. This is dot-com bubble. Okay, this is dot-com bubble. So now you see all those people who bought at this price, I'm repeating again. So now for around here, a little opportunity they got, and ultimately till 2005, for around 2000, not 5, 2006, nearly between 2005 and 6, they were not making any money. So it will be 2005 will be here, it will be slightly more than 2005. Got it? So this is what a similar thing. This is dot-com. This is the subprime crisis. All those people who bought at this level till 2014, till 2014, they were not making any money. This is becoming, okay, just a moment. Okay, let me change my pen. Very, very confusing. Okay, I am using this. Okay. In fact, nearly 2015. So they were not making any money. Similarly, here also, here of course, this is in between, it came up and then after that it's going down, and from year to year, again, this is 11, another 4 years. 4 years, zero return. From year to year, those people who got a chance to make book profit, so they made cut to cut, break even. So this is the reason why, despite it's a growing economy, despite it keeps growing up and up and up, you cannot make money if you do not take the correct decision. Okay, blindly, if you just keep on investing, you are never going to make a above normal return. Even making a 12% return, which is very logical, becomes extremely difficult. As I told you, 2000 to 25 years back, somebody invested here, he is making just 10 to 11%. I did that calculations. You can also do that calculation. And the problem is, it's not that, like, this is where I started my career. 1997, I started my career. So it is not that I got all my 25 years of income here. Then it's a different story. Probably I'll wait and then I'll invest here because I have knowledge. This is the lowest. Okay, but this is not like that. Okay, the money keeps coming every month. So every month, irrespective of the market situations, you have the compulsion. You will have to invest. That's why we need to follow that strategy. That strategy we are going to create today. Okay, got it, everybody? Standard deviation means this PE, standard deviation. This is the one standard deviation up. This is the one standard deviation down. So that's why we go very statistically. In case, like, in future when we'll start this FNO, so there also we go very, very scientifically. No one else goes that way. And that's why we remain safe. And if you remain safe, you can make money. Got it? Meaning two ends. Yes. Meaning that's why I am saying that we will remain in the market in this range only. One standard deviation up, one standard deviation down. That means 68% time the market will remain within this range. And this is more than enough to make good money. And you are going to understand it. Okay, so we will, that is the reason statistically I am saying. So this is, what is this? What is this point? What is this point? Yeah, awesome, Kabir. This is, what is this point? This upper one standard deviation, one SD. This is, you don't have to understand standard deviation. You just understand this. What is this point? How much? What is this point? Hey, everybody tell me, what is this point? Where are you? Like 31 people, what you are doing, man? I think you have started doing your own course. Way too above normal. What is this? Can you see this figure? This figure is 25.68. So we consider it as 26. And what is this point? Okay, let me clean it up. Okay, and what is this point? Can you see that? This point is 16. So 26 upside and 16 downside. So this is where we take action. Okay, this is where we take action. 26. Yeah, Dr. Azmera. Okay, so do not help these guys. Okay, let them think. Okay. Because otherwise they will not think and they will not, their understanding will remain half baked. Okay, all these senior students, please do not answer. Let these new participants think such that they develop that thinking capability. Good afternoon. Good afternoon. Clear? Everybody clear till now? Please type CLR. Please type CLR. फटाफट 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 फटाफट. ठीक है, बहुत दूर बाकी है. Clear, right? Okay. Okay, awesome. Okay, so now we are going to create our strategy. Okay, so now when market goes to, when I say market means market P, when market P goes to 26, what will you do? Don't worry, Kabir, that's what I am taking you, right? What will you do? Everybody, when market goes to 26, you will exit from the equity market and we will enter what? We'll enter at that point of time, we'll enter debt market. Yeah, awesome, guys, right? Oh my God, you guys are smart, right? We'll enter debt market. So write it down on your paper. 26, enter debt market. Okay? Enter debt market. Okay, so now when it comes down to 16, then what will you do? You will buy or you will sell? You'll buy or sell. When it comes to 16, it will buy or sell. You will buy, everybody. Everybody tell me, when it comes down to 16, you'll buy or sell? You'll buy, right? And if it comes down to say 11, of course, not very, very unlikely. If it comes down to 11, then you'll be buying more, right? Right? You'll be buying more. Okay, you'll be buying more, right? Got it? Okay. So now you tell me, when the market comes down to 16, why market comes down to 16? Because majority people, they sell it, that's why it comes down, or majority people buys, that's why it comes down. The 95% people in the market, they buy, that's why it comes down, or they sell, that's why it comes down. 95% people sell, that is why it comes down. And all your friends and others, guys, your acquaintances and all the experts, 95% of 95% experts, 95% all your friends, all of them, when they are selling, what will you do? What will you do? Everybody, you buy, right? You buy, because you know that 16 is the PE. 16 is the lower PE. 16 is the, you know that 16 is where the price is, potato price is down, probability of going up is high. You know this. All these people, other 95% people, they do not know that. Okay. Similarly, when market is at 16 PE, here 26p, sorry, 26p, right? So what, all the, how it goes up to 26p? Because all the people, the majority of the people, 95% people, what they do? They buy. Okay, since all these people buy, that's why it goes up. What will you do at that point of time when it reaches 26? Everybody is buying, like, oh my God, my 60% return, like, he has made already. I'm going to buy this mutual fund. I'm going to buy this stock because that has already given 90% return. So it will give more and more and more. Don't listen to all this nonsense crap. You look at the valuation. It's fine. It is giving 60% return, but still, if the P is 16, you buy. It is not that price. It is what it is. It is not the price that is important. It is the valuation, the PE, the PE ratio. Okay, it's the valuation. PE is one of the valuations. There are so many other valuations. Okay, but it is, as of now, it is the PE that matters. Okay, clear, everybody? Clear? Anybody has any question, you can ask me. Make it 100% clear right now. We are going deeper. Awesome. Okay, I'll make it more awesome. Please type, everybody. Clear? Everybody do that. Quick. Like we'll have to take lunch break also. Okay? 1:30 ho gaya already. After this strategy only, we'll take the lunch break. Clear? What about others? You are having some lunch or something? This is for mutual funds. Yeah, Inito, this is we use it for mutual fund. That is the backbone of fundamental investment. Even for stock market also, this is the backbone, and that is why we always insist that those people who join our stock market course, they should finish this workshop. Only after that they become eligible. Because otherwise, what will happen? These things we do not discuss there. Okay, so there we go above this. So that's why this is the backbone. Whether you are investing in mutual funds or stock market, this is the backbone. This is the very fundamental understanding, basic fundamental understanding. Okay? How to decide to buy on 16. Don't worry. Arpita, thamba. I am going to make you an expert. Okay. I'll keep monitoring. Okay, don't worry. Okay, sir, when is the lunch break? Okay, we'll finish this. So it depends like how fast you go. Okay, we'll finish this. After that, we'll take the lunch break. Okay, so now one more thing you tell me. At 16, when it comes down to 16, you will buy. Okay, so because why you buy? Because you keep answering each and everything fatapat. Tell your family that you will take some time for the lunch, because it is the after that you don't have to do this workshop again. Of course, you have the liberty to do that. You have the freedom to do that. But at least today, tell your family members that okay, you please continue. I'll be joining sometimes later. Okay, because it is cheap, because you know that chances is going up is more. Okay, yes, awesome HP, because you know the probability of going up is high. Okay, because it would go up probability. Yes, right? Okay, so now when market will go up, what do you think? The small companies will grow up or the bigger companies will grow up faster? What do you think? Small will go up faster, right? Got it. Okay, you got it, man. Right? So the second point of the strategy. What is the second point of the strategy? Second point of the strategy is at 16. At 16, enter small cap. Write down. 16, enter small cap. Write down. Everybody write down on your paper. At 26, enter date. Exactly use this language. Do not use another language because there will be confusion. Right? How confusion will happen, that we'll discuss later. Okay, once we finish this, then we'll have lunch. After coming back to lunch, I'll go deeper into this. Okay, I don't think we'll be able to do planning today. We'll do it tomorrow. Okay, I think already 1:30, because 1:30 we should have finished the entire strategy. Okay, learning is good. Okay, clear? Everybody clear? 16, enter small cap, and 26, exit. Why 16 enter small cap? Because that is the possibility from here. It's a very high possibility that it will go up. Of course, it can go down further. Okay, that is true. But we'll enter small cap. If it goes down further, we'll buy more small cap. We'll sell our house, we'll sell our car, and we'll buy more small cap. Okay. Okay, at 26, no, exit at, that is why, Kabir, what I'm writing here, that is the reason I'm saying that you exactly write whatever I'm writing. So I'll explain it, don't worry. At 26, I am saying enter date. What to do in between? Thamba. Okay? Okay, in between what to do? Thamba. Okay, there is something we'll have to do in between. Okay, now Kabir is asking beautiful questions. Another, why small companies grow faster? Now you see why small companies grow faster, because you see the big companies, now say SBI, Maruti. So these companies are already everywhere. Okay. So now for me, so I'm a small company. So for me, like an entire world is open. Okay. Tomorrow, if the market goes up, I'll start expanding like anything. It's a small company, right? So I can go to infinity. Like I can grow 1,000 times, might be 1 lakh times. But Reliance cannot grow 1,000 times, not possible. SBI cannot grow 1,000 times. Okay? Each and every corner villages they have got. Now where they will go? Got it? Clear, Kabir? Clear? Why small companies grow faster? Okay, so that's why small cap, when the market comes down, we buy a small cap, because we know they are going to grow very fast. They are going to give higher return. Okay, clear, everybody? So world is open to smaller companies. Yes, exactly. That is the reason. Okay. Okay. So going back, now I am giving you other parts. Now this is the broader part. Here you enter small cap, and here you enter debt market. When you enter, you'll have to exit from whatever you have. Okay, enter means you exit from whatever you have, and then you make the entry. So now in between, let me change the color a little bit. I think so. Okay, so now in between here at 22 is mid-level. At 22 we enter can you see it? Enter large cap. Can you see it? At 22, this is the mid-level. We enter large cap, because what happens as it goes from here to here, probability of going up at 22. What is the probability of going up or down? At 22, what is the probability of going up and down? Everybody. Yeah, you need to awesome. Probability is at 22, it is a mid-level. So probability is awesome, Arpita. Can you see that? Beautiful, man. Okay. So probability is 50-50, right? So it is a mid-level, probability is 50-50. Okay. So 50% can go up, 50% come down. Okay. That is why what happens, we reduce our risk. Okay. So that is why we reduce our risk. So we go with big companies only, because we know from here, if the growth continues, all are big companies, they are stable companies, lesser risk companies. That is why we enter large cap when it is at 22. Okay, clear, everybody? So I have got 3 points of the SOP. Everybody clear? Please type CLR. Anybody has any question, you can ask me. Everybody clear? Thank you, Arpita. Clear? Everybody clear? Okay. All the 3 points. Okay. Okay. So now you say, okay, thank you so much. So at 22, we sell small cap and enter large cap. Yes, Rupinder, you got it, man. Okay. Okay, got it, right? Yeah. So now what happens now to make it smoother? To make it smoother, what we do, we introduce 2 more, because we have 2 more categories. What we introduce to make it more smoother, and so what we do in between 16 and 22, 16, 17, 18, 18, 19, 20, 21, 20, somewhere around 18 to 19. Okay, you can say 18.5 or something. Okay, so we say 18. At 18, between small cap and large cap, what comes? Between small cap and large cap, what comes? Comes mid cap, right? Yeah. So we enter mid cap. Okay, we are smoothing the SOP. We are smoothing the SOP. Okay, and similarly, between 22 and 26, at 23, we reduce our risk further. Okay, so what is the less riskier than large cap? What is less riskier than large cap? What is less riskier than large cap? Index, yes. Enter index fund. Index means Nifty 50 or Sensex. Okay. So now everybody, all of you guys, this is the SOP. This is actually beta value balancing. Why it is beta value balancing, that we will do after the lunch. So right now, you just type the entire SOP exactly this way. 26, enter this. 23, enter this. Or you can do other way also. You can start from 16 also. Okay. So everybody, Just type it as it is in the chat box, everybody. Very systematic way. Everybody do that. Everybody do that. Everybody do that. Earlier P21. Okay, enter date. Okay, 26 enter date. Okay, everybody, entire thing. Give me the entire SOP. Give me the entire standard operating procedures. Give me the entire SOP. Give me the entire SOP. Entire SOP. I need to be 100% sure that you have got it. Okay, Devika, awesome. 26 enter date. Exact language you should use. Why exact language you should use? You will understand it after coming back. Enter date, enter index, enter large cap, enter mid cap, enter small cap. Awesome. Okay, the Arpita Devika has done it exactly same way. Give me the entire SOP, entire strategy. 16 enter small cap, 26 enter date, 22 is mid level, so enter large cap, in between 16 to 18.5, 18.5 enter mid cap. Okay, 23 we reduce risk, enter index fund, beautiful. 26 enter debt, 23 enter index, 22 enter large cap, beautiful. Awesome, guys. Everybody do it, please. Everybody do it. Hey, everybody do it. I'm saying everybody do it. Okay, everybody do it. Everybody do it. So this is the backbone. All other things that is being discussed, they're all nonsense. Now you know why when the people are saying, okay, market will go down, market will go down. We know market will not go down. Or even everybody is saying market will go down. We follow whatever is the strategy. Last time it happened, before September. Till September, it was going up and up. So people become panic every other day in the newspaper, in the TV, and all our students, they were scared. Sir, everybody is saying market is going down. My question is only one. What does SOP says? SOP says buy large cap. We stick to our large cap, and till September, it's touched 23. From large cap, we switch to index fund. After that, it came down only 7%. Okay, so now we have history. Earlier batches, like now we didn't have history, so I had history, which is in the fund management. Okay, so it's in the institution level. But right now we have the history, we have the case studies amongst ourselves only. Okay, clear everybody? SOP is clear. SOP is clear. Awesome, guys. Thank you so much. SOP is clear, everybody. Clear? Okay, clear. Okay, so now I promised you that today I'll make you one of those 5% people who moves ulta and make money in the market. Okay. Are you one of them? 5%? Everybody, are you one of them? Okay. This 5% people moves always ulta. That is why they make money. Okay. Respect market. When market is buying, you sell. When market is selling, you buy. That is why we have that SOP. Okay. Almost there, Kabir. Okay. How to get the P? How to get the P? Where will you get the P? Deepak. Deepak is asking where you get the P. Where will you get the P? Tell me, everybody. Where will you get the P? Nifty 50. Which website? There are so many websites nowadays. Okay. मैंने तो बहुत सारा देखा. Right now I have given you where you get the P. ठीक है. Pixar अभी बाकी है. Okay. So you see, like I am yet to discuss about which mutual fund to buy. ठीक है. Everything I will finish today. Nifty P ratio. Yeah, it is awesome. Thank you so much. Arpita, thank you so much. Sovan, thank you so much. Got it? Where you get the P? This is where you will get the P. Clear? This is where you will get the P. Okay? Deepak. Understood? Deepak, clear? This is where you will get the P, right? This is where you will get the P. This is where you are going to get decision. Now, today, if somebody asks you, hey, ma'am, sir, please advise what kind of mutual funds I should buy. Tell me. What kind of, what category? Which one I am not asking. I am asking what kind of mutual fund, which category of mutual fund I should buy. Okay, everybody, please give me a recommendation. Everybody, please give me recommendation. I am asking you, sir, please tell me what kind of mutual funds I should buy. I want to invest right now. So you will say, please buy, everybody, please buy large cap because it is very near to the median. Got it? Okay, we will discuss, we'll go more. Today, large cap. Understood? That's why when you are in advanced course, I keep saying, okay, you see, you cannot say like, okay, like, there are few people, right? So, in a forum, they ask me, okay, sir, please suggest the best mutual fund. There is no best mutual fund. It keeps on changing. Okay, this is the reason why it keeps on changing. Not all the funds are good all the time. Okay, so now, since I have made you one of these top 5 people, top 5%, before going for a break, you'll have to give me a dakshina. What is that dakshina? This dakshina is more than money. What dakshina will you give? Everybody, all of you guys. Immediately, I'll give you blessings. Okay, and my blessings comes in the form of money. Okay? No gambling, follow the continuous learning. That is for you. For me, what you will give me? You know what you are going to give me? Potato. Okay. Okay, yes, HP. Okay, thank you so much. Okay, so now this is what you are going to give me. What you are going to give me? This is what you are going to give me. Right? So, write whatever you feel without any hesitation, dil khol ke. Right? And of course, when you give the reviews, those reviews are, everybody can see it. Now you see, it is very important that you give review, because there are a lot of people, they are not aware of all this stuff. They have been losing money. They have been struggling to meet their goals. Okay, they are going to wrong places, and wrong places are many, right places are very few. Now, whatever you are feeling, frankly, you write everything. So it will be there in the websites, and anybody will be able to see it. I think, let us make this knowledge available to everybody. Okay, so that they can come and they can learn, and they can also create their difference. And apart from that, it's a big, it is something much big. Okay, you see, sometimes what happens, I feel tired. I feel like giving up. Okay, bahut ho gaya. Okay, so then I go there and I read these reviews. All those people who have already given reviews, please do not give it, because if you cannot give 2 reviews. If you write once, then all your earlier reviews will get completely deleted automatically. Okay, in Google, you can give only 1 review only from your ID. Yeah, you can use different ID, that's a different story. But since you have already given reviews, you don't have to give. Those people who have not, please give that review. I am going to see it myself. Okay, and definitely Poonam will respond to it. And these reviews help me keep growing. Okay, why I am taking this? I can give you the recordings. I'm taking this because I'm waiting eagerly to see your reviews. Right? I do this live. Then after that, tomorrow, I will open it and I'll read all the reviews. So that gives me encouragement. That gives me meaning to life. Okay. Okay, already given, Bhavik. Okay, yeah. Yeah, thank you so much. Those who have already given, my sincere gratitude to all of you guys. All those people who have not given, please do that. Okay. So it's not necessary today only, right now you'll have to do. You can copy and paste it. Once the session is over, then also you can give you. Okay. So now we are taking, today is the last day. After that, most of you will not do that workshop. So let us finish that knowledge part today. Okay. Tomorrow we are going to do that planning part, but knowledge part is not over. So we are going into deep. We are going to choose we are going to understand how to choose the best fund. Okay, after this, and this also we need to go deeper a little bit, and then we will understand how to choose the best fund. There are 4 or 5 5-star funds. How to choose the best one. Okay, all these things we are going to understand after the break. Planning part also some. Okay, just a moment. Sir, planning part also, some part of it, let's do it today. Kabir, I find it difficult. I think we'll not be able to do it because before the lunch, we should have finished the entire this part actually. This part means like up to choosing of. Normally, what we did after lunch, we do planning. Okay, so now since it is not possible, it's already 2 almost. Okay, glimpse, glimpse we will discuss and we'll have a chit chat definitely. Okay, Kabir, don't worry. If you are there, I'll be here. We'll do that chit chat, don't worry. Okay, but not proper training. Proper training will happen on Sunday only, because Monday only, because we are lagging behind. Okay, but that's okay. We are having a solid learning and this batch is awesome. Let me tell you. Okay, so now let's take half an hour break, lunch break. After that, we'll come back and here we will go deeper, because otherwise you will be committing mistake. I am 100% sure. That's why we need to go deeper. Okay, just a moment. Let me start up beautiful music. Music किधर गया? So you can go for a break, and I am just putting this happy music background. Happy music, good vibes. I got one. I don't know how it is, but I think this will be good. Happy eating, yeah. Okay. Back, everybody. Okay, we are in the last leg today. Back. Okay, awesome. Okay, now anybody has any question? You have understood everything? Anybody has any question, any doubt, how to use it, whatever? Thora sa, if there's any slight doubt, tell me. Anybody has any doubt, any question, you can ask me. Whatever we have covered so far, any doubt? Okay, Shiva Kumar is asking, sir, does it mean we shouldn't be having multiple mutual funds like large cap and small cap at the same time? So what do you think, Shiva Kumar? About the exits. Don't worry. So we are going to discuss that. Don't worry. About the exits, we are going to discuss right now. Okay. Now, Shiv Kumar, now what do you think? After doing this exercise, what do you think? Okay, as per SOP, it's not that case. Why it is not that case? It's not because of SOP. Because of SOP is what? Some practical thing, again, we make it a rule. Okay. If you do that, then what will happen? Of course, I think you'll understand it better when the exercise that we are going to do. So you'll understand it better most probably, but still, erosion, yeah. Got it? Got it? So now what happens? Now what happens? Can you tell me, Shiv Kumar? Suppose you are having both and market is at a certain level. Okay, Ritesh, one question. Are we talking about investments in mutual funds at the P levels discussed? Yes, exactly. That's what we are doing. Okay. We are not talking about stocks. They're not directly start making investment based on stock, based on this SOP in stocks, because stocks is more, it is company specific. Like, the shop. Okay, remember, that's why we did it. Shop is very specific. Okay, it's a company specific. What is happening at a potato? What is happening at a farmer level? What is happening at the rain level? Rain means that weather level. What is happening in the transportation? All these things. That's why we go with average. Understood? So that's why they're not like, we need this in knowledge. That's for sure. For stock investments, if you really want to do fundamentally, we need this knowledge, that's for sure. But the thing is that you cannot use it as it is because this is an average. That's why we are going with broader thing. What is broader thing? Mutual funds. So many funds are there. Large cap. So you know how it behaves. Mid cap, we know how it behaves. Small cap, we know how it behaves. Switching would also dent, right? Yes, Kabir, switching will also dent. So you'll have to do that calculation. Particularly when you make profit, then only it will dent. When it make loss, then it doesn't dent. Okay, but you'll have to do that calculation. If I continue, then how much I can lose. If I do not continue, then how much I can lose. Okay, so the profit and loss at each point, you'll have to do that calculation. It's very simple, you know it. Okay, how to do that, and it will be more clear. So we always consider, okay, if it goes to the normal level, if market goes to the normal level, how much I'll lose. Because normally what happens when you make money, then after that, if you switch, then you'll have to pay tax. So that calculation we'll have to do. If you think that no, the loss is less, and the probability, if you switch, then the loss will be less. Then you'll have to do that. Okay, for example, last time from September to March, those who are in mid cap, etc., they lose up to 20% also. But tax was not that much. Okay. At the same time, our index came down only by 7%. September to March. Right. So this is how you'll have to. So September to 7% from 23 to 21 level. Then we switch back to large cap funds. Got it? So switching is an issue when market is up, not when market is down. Because when market is down, you can book losses, and those losses in future, if you make profit, you can adjust. Okay? Sir, can we have multiple investments in mid cap, large cap, small cap at the same time? Devika, what do you think? Based on our risk appetite and investment goals, what do you think? Devika, after understanding this, what do you think? So is it a good strategy? No. Why no? Suppose market has at 23p or 26p. If you have small cap, what will happen? Market at 26p, if you have small cap, what will happen to that small cap? Market is 26p and you are at small cap. What will happen to the small cap? What will happen if you continue with the small cap? Yeah, retail is awesome, right? It will fall exceptionally. When? Because now the probability of coming down is high. So you know it, okay, there's a probable any point of time market can come down. We don't know when, but the probability is high. It can come down tomorrow, it can come down after 6 months. And when it comes down, if you are having small cap, so there's a probability, huge probability, your entire profit forget. Probably your capital will be wiped out also. Understood? Depending on where you made the entry. Understood? You forget profit. Capital will also be wiped out. So that's why you'll have to, what we are doing? We are reducing our risk. That is why it is called beta value balancing. Value means valuation, PE. Beta is the riskiness. Okay, in case you do MIM, you will understand those things better. But right now, today, you just understand. Small cap is having highest beta. Mid cap is having slightly lower beta. Large cap is having again less beta. Index is having 1 beta. Okay, index is 1 beta. So beta means it moves very. Small cap is having highest beta. It moves in both the direction. Okay, it moves in both the direction. When it goes up very high. When it comes down very high. Sharply. That's why it is called high beta. So what happens as the valuation increases, we reduces beta. Valuation increase. That's why I have given this name beta value balancing. No point doing any Google or ChatGPT until and unless I publish this. I have not published it as yet. Okay, so this is beta value balancing. If somebody has stolen it, that's a different story, but otherwise you will not get it. Clear, everybody? Let us do this exercise, then you will understand it more. Anybody has any question? Please ask me. If you have no question, then Anna, I am going to discuss this. Anybody has any questions so far? Okay. No question, right? So now let us go ahead, and then after that we are going to see how to choose the best one. As valuation increases, we reduce beta. Yes, exactly. Because what happens? Market value goes up, our personal market risk goes up, our personal risk comes down. So we make a balance. Market risk comes down, our personal risk goes up. Understood? Okay. When the market risk comes down, we increase our risk, personal risk. When the market risk goes up, then we reduce our personal risk. That is how we make return which is above normal. Can we have both equity and debt mutuals fund at the same time depending on our goals? Yeah, retest. Yeah, that's we do. It's not that we do not do that. We do that, and that we will understand tomorrow. Okay, tomorrow when we will be doing the goal setting, then you will understand. Definitely we do that. Arpita, that's what we are going to understand. Okay, so we are going to discuss it right now. Now you see, we always go ulta, right? Other direction. So how? Now you see when the market is up, entire world market as green. We do just opposite. When the market is up, we mark as red. When the market is down, we mark as green. So we go always contradictory. Okay? And that is why we need money. 12% is IRR. You can say XIRR, you can say. Okay, it's an XIRR only. Because that's how all the calculations are done. So it's not absolute. Absolute 12% will be nothing, man. If you are investing for 10 years, 12% absolute return will be how much? Nothing, 1%, 2%. Okay. So now this is our, so now today, so this is the PE 21, 23, 26, 18, 16. So what is the PE right now? What is the PE right now? Nifty P is right now. Enter index. Small cap 21.95. So it is at 22. Okay, so now it is 22. Now you see at 22, our strategy doesn't say anything. But we'll have to enter, right? Because you are new. Those who are already old, so they are having some investments as part of strategy. But since you are new, now you will have to take a decision. Okay? So now when you have to take a decision, it is somewhere around in between 23 and 21. So what will you buy now? Tell me, everybody. So this is somewhere here in this dot. It is at 22. What will you buy? Okay, somebody is buying large, saying large cap, somebody is buying index, mixed, beautiful. All of you are correct. All of you are correct. Okay. So now let me tell you, normally what we do, we try to invest wherever it is, wherever closer it is. Suppose if it is very close to this, then we'll buy large cap. If it is very close to this, then we'll buy index. Because what happens, there is a possibility that immediately it will cross. So when it is in between, you have a choice. If you think like I'll go aggressive, so you can buy large cap. So no, I'll go conservative, it might come down. You can go index, or you can do one thing. If you think like you should be very, very scientific, very mathematical. Like we have one student, you are going to, I think you have already met him, Dibendu. Dibendu is very mathematical. He will not do anything, means if it is not supported by mathematics. He is such kind of people. So now he asked me this question. So now it is in between what I should do. So I suggested, okay, if you want to go really mathematical, then you do 50-50. 50% you do index, 50% you do large cap. Okay, 50-50 karo, then after that. Okay, so it is up to you. It is not going to, after 10 years, it is not going to create a huge difference to your return. No. Okay, it is almost like, I keep saying that it is like fourth standard mark sheet, grade sheet. At fourth standard, it was a huge thing. Oh my God, what happened? How can I get this? All mommy, papa, uncle, everybody. Today, it doesn't matter. In fact, probably you cannot remember what the hell happened in fourth standard, right? So this is how it is. Now, suppose you have whatever you have bought, you have made an entry. Okay, so suppose you have made an entry at say large cap. Let us say large cap, because if you take both, it will be confusing. So you'll understand it. So it is large cap, and then it is coming down. Say it is coming down. So now what will you do? What will you do? You have bought large cap and now it is here. Market has come down. Everybody, what it is saying? What the SOP is saying? SOP is saying, when you cross this, SOP is saying, did SOP say enter mid cap? It is here. Did it say enter mid cap? Did it say enter mid cap? It didn't say, right? It said enter large cap, and you are already in large cap. Okay, that's why I'm saying, okay, this is important. Enter large cap. Enter large cap, already you are in large cap. You don't have to do anything. When this will tell you, then only you need to change. What will you do? What will you do? What will you do, man? Hold, yeah, everybody. Hold, no mid cap. It is not crossed yet. Did it cross? It will cross, right? When it touches, then it will say. It's not saying anything. Since it is not saying anything, it will not do anything. What will you do? What will you do? Still hold. Are you getting it? Still hold. What will you do? Everybody, buy enter index. Okay, yeah, enter index. Enter index, right? What will you do? Hold, right? Got it? Okay, everybody got it? Now, large cap, because it has already crossed. Large cap line, it has crossed. When the line is crossed, then only you need to take a decision. Until and unless either of these lines are crossed, you don't have to take a decision. Now, even if it is crossed, you don't have to. You are already in large cap. You are large cap only. You are large cap only. Large cap. Large cap. You don't have to do anything. Now, mid cap. Got it? Now, whole mid cap. Yes, whole. Right? Got it? Understood? So when it crosses, then only you have to take a decision. Otherwise, you do not take decision. Now, Small cap. Are you getting it? Okay. So same way, like, all the way. So when it crosses, then only you'll have to take a decision. So that means once you buy large cap, then for this entire area, it is large cap. Once you buy index, for this entire area, it is index only. Once you buy, say, mid cap, this area is mid cap. You don't have to change. You will change only when it touches one of the lines. Otherwise, what will happen? You'll have to keep on changing. And this is your, sorry. This is your small cap. Small cap, there is no boundary niche. Similarly, this is your debt. Debt doesn't have any upper boundary. Once you enter debt, then from 23 to upwards, it will remain debt. So as soon as it comes down, you should not enter index. Are you getting it? It's exactly. So once you are in debt market, you will enter debt market only when you will enter equity market only when it crosses down out of 23. Because otherwise what will happen, like it may come down tomorrow, like tomorrow it can go up again. So you'll keep on switching, right? So this you should not do. You will do only when the line is crossed. When the line is crossed, you look at it, what it says. If you are already having that, then you don't have to do anything. If you are having something else, then only you should change, switch. Clear? Everybody clear? Please type CLR. Anybody has any question, you can ask me. Otherwise, type CLR. Everybody type CLR. Okay. Clear, right? No question, right? You will understood that's SOP. So this is SOP, and that is why we call it beta value balancing. When the market valuation goes up, we reduce our personal risk. Beta means risk. Right now, you just understand like that. Okay, beta means risk. Beta means risk of the mutual funds, risk of our holding. Valuation indicates the risk of the market. When the market is at 26, very high risk, we reduce our beta to 0. 0 means 0 to nahi hota hai. So debt market, that means we are not taking any beta. When the valuation is 23, there is a probability, high probability that it will come down. We reduces our beta to 1. When the market is 21, then we remain neutral. So we take large cap, slightly higher beta, but that's fine. When the market valuation is very low, that means there is no risk. Like normally what people think, oh my God, market is very risky, it has come down. Are Baba, when it comes down, risk reduces. Risk does not increase when the market comes down. When market comes down, risk reduces. When everybody says, oh my God, it's so risky, it has come down. Risk was high when the market is high, then risk is high. When the market comes down, risk is not high. Then we should increase our personal risk. We will increase our beta. That is why I have named this strategy as beta value balancing. Okay. Kabir sir, calculation wise, could you help understanding this so that we get hang on profit? Okay, so now you see like that you cannot do that. Why you cannot do that? Because you don't know how long it will be in this level. It is not going to, there is no fixed rule that, okay, after 1 month it will be here, after 2 months it will be here. It's not like that. There might be for 3 years, it might be around this level. You never know. Okay, so that's why you cannot do exact profit calculation. It's not possible because we don't know it. Okay. Nobody knows what will happen tomorrow, but we know if something happens, what to do, we know. Okay, we are well prepared. So that is the difference between informed investor and other investors. Nobody knows what will happen tomorrow. Uninformed investments, they have an illusion that they know what will happen tomorrow. Also, they have an illusion that they know what to do if something happens. That is the reason they end up buying high, because they say they see lot of profits already people have made. They look at that. And when the market comes down, they see everybody has lost. So they also exit. Okay, so it's a hard mentality. Okay. So Rupinder, with short-term capital gain at 20%, would this selling and buying in less than 12 months won't eat away the profit? Definitely. Beautiful question, Rupinder. Definitely it will do. So you'll have to do that calculation. Okay. So now there is a strategy. What is the strategy? So this strategy is, what is the strategy? What we do in that case, now with that, some clients also it happens. Normally, of course, it like, it doesn't fluctuate that much. So you can see it. Sometimes it happens. Like, this time it happened. Quickly it was 23 and then 21 and it again went up right now. Okay, so right now it is 22. So this happens really quickly. Okay, the market came down pretty sharp actually. So normally it's very rare, it doesn't happen, but sometimes it happens. When it happens, now what we are doing for our clients, some of our clients, they say, okay, I want to have a peace of mind. So just whatever it is, switch. Some others people are concerned, oh my God, I'll have to pay this much of tax. Then what we are doing, so now tax, all those SIPs that have been made before, now you see, when the market come down, then you don't have to pay tax. You'll have to pay tax when the market goes up. When you make money, then only you'll pay tax. If the market comes down, there will be loss. You can book that loss and you can preserve it. Okay. Tomorrow, when you'll make money, profit, then you can adjust this loss. And you can carry forward that loss for 8 years. Right? Capital gain. Now, in case of short term, of course, in case of short term, what we do? So we only redeem those portions which were invested 1 year back. So that means every month we redeem. All the lump sum amount, suppose 11 lakhs rupees and 1 lakh invested last 1 year and 10 lakhs invested earlier. 10 lakhs we will invest. 10 lakhs we will take, switch. And this 1 lakh rupees, 1 lakh divided by 12, whatever. So 80,000 or 85,000 rupees every month we will switch. Okay, such that we do not have to pay the short-term capital gain. Now the tax regime is harsh. Earlier, it was not that harsh, it was less. So it was much more easier actually. Now it has become so harsh. So investing in debt funds is also becoming very, very challenging nowadays. Got it? And the tax rate has been increased. So yeah, you cannot do anything, right? It's a elected government. You cannot do anything. Okay, whatever they say, you'll have to say thank you and you'll have to take it. Okay? कुछ है क्या? कुछ कर सकते हो? Can you do something? They say nobody is going to listen to the middle class. Right? So you'll have to, whatever tax rate they say, you'll have to abide by it. You'll have to find out a way. That's it. Sir, can you please explain about long-term investment then? My understanding is that we need to hold long-term like 5 to 10 years for compounding effect of interest. Devika, compounding effect of interest means what? I'm answering your question. Okay, I'm taking 2 lines. One I'm taking in next line. Another one I'm taking small cap line. Okay. Index line means 20, 21. Small cap means 16. Okay. So now you have a choice. What is the choice you have? Up to now, you tell me. If you invest, Shobham, if you invest suppose below 16, and then you will hold it till what point? Shobham. Till what point you will hold it? Till what point you will hold it? Oh yeah, 21 is LC, right? Okay. Sorry. Okay, yeah, you guys have become smarter, man. Okay. Okay, that's good, man. Index will be 23, right? Yeah, 23. Okay. Now Shobham is asking one question. Yeah, Ritesh, awesome, man. Right? Shubham is asking this question. So if he buys, if the market goes below 16 and if he buys small cap, till what point he will be holding small cap? Everybody, till what point he will be? He will be holding till 18. Yeah, very easy. Got it? Clear? Shubham? Understood? Just follow this, right? You don't have to do anything. It's very easy. Just you see what it is saying. This one. You just see this. You don't have to you see okay, 18, enter mid cap. Oh, enter mid cap. I'm having small cap. Click. Okay, after that again, okay, it has 18. Okay, what is saying? Enter mid cap. Oh, okay, I am having mid cap only. I don't have to do anything. Very simple as that. Okay, yeah. Okay, so now you see you are now investing here. Say you are investing in, so from 16 you are starting your journey. Say from 16 to 23, and 16 is PE, Nifty PE 16. Okay, it is Nifty PE, always remember. Nifty PE 16, Nifty PE is 23. So when Nifty goes from 16 to 23, how much the Nifty will make? How much Nifty will make? When it goes from how many points Nifty will make? Nifty will make 7 points. Okay? Nifty will make 7 points. And then this is case 2. Suppose if you are buying small cap. So when the Nifty will move from 16 to 17, your small cap will make 7 points or more than that. Tell me, when Nifty moves from 16 to 23 and Nifty makes 7 points, during that period of time, if you invest in small cap, you will be making, if you invest in small cap, okay, suppose today Nifty is at 16 today. After 1 year, Nifty from 16, it has become 23. So Nifty makes 7 points. Okay, clear? I'm just hypothetical. Okay, in 1 year from 16, it has gone to 23. So Nifty will make 7 points. That is clear? That is clear? Roughly, I'm not doing detailed calculation, just for your understanding. This is clear? This is clear. Hey, be with me, man. From Nifty, when moving from 16 to 23, Nifty index when moving 16 to 23, how much you are making? How much you are making? Everybody type. 7 points, right? 7 points you are making. During that same period, when you are investing, if you invest in small cap, during that same period, if you're investing in small cap, you will be making more or you will be making less? You'll be making more, right? So we'll be making more, right? So now last time when it was 7% down, small cap was around 10, 15, 20% down, up to 20%, 30% also. Okay. So let us say you make plus 10 points. Okay? Assumption, the 10 point, definitely will get more. Right? So you have made 10 points. Now, suppose you do not switch. You do not switch. Now this is the point. You do not switch. Here you are supposed to switch to Nifty, but you do not switch. and you continue, and then market comes down again to this level. How much you are losing? How much you are losing? You are losing minus 10. So what is the net? What is the net? Net is 0. Okay. So now second case, you switch to Nifty. Here you switch. So now Nifty 50 from here, when it will come down from 23 to 16, how much it will lose? How much it will lose? Yeah, you got it, right? It will lose 7. Okay. So now in this case, when you are switching, what is your net? Okay. This is what we try to do. Right? This is what we try to do. When the market up, we try to harvest more. When the market is down, when the probability of coming down increases, and when the market is down, then we try to protect our capital as much as we can. We do not know if the from 23 it will definitely come down. We do not know. What we know that there is a high probability it will come down, because every time it happens that way. But we do not know whether it will happen today, tomorrow, day after. So what we do, so we switch such that in case it comes down, we do not lose much. If it goes down, we will make something definitely. Okay, but yes, you are right. If we continue from here, if it goes up, say another 7 points, if you do not switch, you will be making more. Definitely you will be making another 10 points. But from here, if the correction happens, then the story is same. Entire 20 points you will lose. Okay, understood? So that is the reason why we do switch. We try to maximize our return when the market is low, and we try to minimize our loss when the market is high. Got it? Didn't understand that where the 10 came from. 10 came from this. No, what? Hey, Kavir. So what I ask, when the Nifty goes from 16 to 23, so how much is what is the gain? What is the gain? When it goes to, like, you see, you are not attending. That's why you are asking this question, Kavir. When the market Nifty is going from 16 to 23, that is 7, right? So during that same period, if you buy small cap, you will get 7 or you will get more than that. During that same period, if you buy more than that, that's what I have assumed. That say we got 10. Okay, that is assumed, yes. Because we don't have, like, of course, we can, like, that is statistical analysis. Lot of this, it's not necessary. Okay, so that is the reason why we need to switch. Okay, if you do not switch, what will happen? So you will be getting humble growth, and if your luck is bad and if you end up buying a huge amount at a higher point of time, after 25, when you do the calculation, you will see that you have got only 5% over 25 years. At least 15 years I have seen. Okay, over 15 years, people have made less 4%, 5%. Because their entry point was wrong. That's what happens. Okay, so now suppose I know that this mutual fund is going to give me 10% return. I am holding this mutual fund which is going to give 10% return. Now I have understood that there is a mutual fund B which will give you 25%, which will give me 25% return. Now for compounding, I am not switching. I am continuing with 10% return. Okay? Because somebody told me, do not switch, you will lose compounding. Okay? I am continuing with mutual fund A giving 10% return for 20 years. Okay? Another, 10% return I have got. Now I have seen that this is a better mutual fund. From here onwards, it will give you 25% return. Should I switch or should I not switch? Everybody. Got it? So which one will give me more return? A, then I have switched to B. That will give me more compounding, or continuing with that same fund will give me more compounding. A plus B will give me more compounding, or only A will give me more compounding. A plus B will give me more compounding, or only continuing with A will give me more compounding. Understood? It's so clear. Do not listen to this free nonsense stuff. They have got one capability somehow. They got that ability how to make this videos viral. They are selling nonsense crap for free. And since it is free, there is no rain. Okay, there is no rain, there is no control, nothing. All the nonsense stuff is going viral. And this is good for us. This is the absolute good for us. That is why we make money. That is why institutions make money. It's very simple. Someday probably, so we'll discuss it. In particular in MIM, we discuss this, but in someday, in Monday session also, I'll discuss it. Okay, my experience. As simple as that. This, like, my boss said, these idiots are there, which is not ready to learn anything. Don't think about that. Since they are there, that's why you have done MBA in finance and are working here. Otherwise, you would have joined them. Don't think about that. Okay? It's a very different story. It's the darker side of the stock market. So now you understand? So you'll understand when we'll discuss it. Okay, sometime in MIM, we go into details about all these things, but sometimes in here also we'll discuss something. It's a long discussion. It will take around 2-3 hours. How these things happen, how it works, that other side. Okay. So now what I mean to say, do not listen to all this free nonsense stuff. Okay. So they may not be biasless, or they, like, two things. Either they don't have knowledge, or they have knowledge, but knowingly they are doing all this nonsense stuff with some agenda. Either of these two. Okay. So please be careful. Yeah. Okay, Kabir. So what goes up will come down. So when it comes down, switch to your cushion. Yes, Kabir, awesome, man. Loved it. So when you know that you are at a very high level, you put cushion. Okay? And when you are below, you don't have to put cushion, but we do always ulta. When we are below, we have cushion. When it goes up, okay, you will understand it more. Okay, now we are going to statistics, then you will understand more. Okay, I'm going to show you the meaning of the statistics. So now that we should do as practice, sir, and how to select best mutual funds. Yes, that's what we are going to discuss right now. Once you know what kind of fund you should invest, then the next step is how to choose the best fund. So there I am going to show you the statistics. Okay, to really understand it more. Okay, large cap starts at 21 or 22. Large cap starts at, yeah. Okay, you know it, man. Okay, Dhrubajit Das, whether the switching or redemption occurs in real time, like stocks, or is there any time gap for having confirmation from? There's a around, you can say, they say it normally 3 days, but always take 7 days. Okay. They say within 3 days. Okay, that's that. But the thing is that it may not be practical. So 7 days, definitely you will get the confirmation. Okay, Dhrubajit Das. So those things, like, we can discuss in the group amongst yourself also. Those practical aspects, right? And again, we have Mohini ma'am. She manages our clients' money. So she is more about that. She knows exactly which fund house takes how long and all this stuff. Okay. Okay. If there is no question, type CLR. I am going to show you how to choose the best fund. Okay, CLR, CLR, CLR. Okay, got it. Oh my God, 310. Okay. So another, I think, around 30 minutes will be over, most probably. Okay. Okay. So now you know which site we use for choosing the best fund. First thing is that now let us take a decision. We are going to invest. So we are going to invest by what category? What category we are buying? Everybody. Everybody. Then only I'll open it. Okay. Otherwise, I'll not open. Every category. We are buying right now. We are buying large cap, right? Everybody. Yeah. Awesome. So we are now it is our duty. There are so many large cap. How to choose the best large cap? Okay. So now this is the next step. So we are going to value research online because this is the easiest. Slowly you start learning Morningstar yourself. Morningstar, there are so many things. Okay, so sorry, value research online.com. This is a free website, so you'll have to log in. That's the one thing. Otherwise, you will not see the so many things. Okay, so creating login is free. So first, you please note down on your paper. I think I said it on Friday. Again, I am repeating. Go to funds. After funds, I told you guys. After funds, go to funds. Then after that, go to funds. Then after that, monitor. Okay, awesome. Kabir, beautiful. Okay, fund monitor. Awesome. Right? Thank you so much, guys. Fund monitor. Okay, so in the fund monitor, you go down and you will see all the different kinds of funds. Right? So we are expert. We will go by this. We will not see like all the nonsense stuff. No, not nonsense stuff, but I don't know, like So now we will go by this. So we are going to see large cap as you have suggested, large cap. Okay. So now after going to large cap, you go to this tab. Write down value research fund rating. Go to that tab. Right now we'll change. Kabir will change now. Okay. So now you have knowledge. You are in advanced level right now. So we will change this a little bit. Go to value research fund rating. And then you go down and you choose only 5-star fund. In case 5-star funds are not available, then you can come back and you can choose 5-star and 4-star. Okay. So now only 5-star fund we are choosing. Done. Come to management style. In the management style, go to active. Okay, what is active and what is passive? That thing I think I didn't discuss. Right now I'm going to tell you, listen to me carefully. And then you note it down. Okay, you just type apply. Yeah, Rupinder, you are correct. Right. So now, what is active? What is passive? Active funds are those funds where fund managers need to use their brain in choosing the stocks. That is active fund. Passive fund, any fund where fund manager doesn't have to utilize his brain to choose the stocks. Okay, it is already defined. That is passive fund. Index fund is a passive fund because index fund you don't have to choose. Like these are the 50 stocks you'll have to buy. And if you're a Sensex, these are the 30 stocks you'll have to buy. Very simple. Okay, so these are all are passive. Anything where the fund manager doesn't have to use his brain to select companies, that is a passive. Okay, clear everybody? Please type CLR. Passive and active, clear? Please type CLR, everybody. Everybody type CLR. Okay, yeah. Okay, awesome, guys. Okay, so now we have got 1, 2, 3, 4. 1, 2, 3, 4. Only 4 large cap fund. So out of that, how to choose the best one? So for that, we will go to risk. Please note down risk. So this is for equity fund. Okay. Go to risk. Okay. So now these things we need to understand. Now the first criteria number 1, note down, R square should be more than 0.8. R square should be more than how much? Everybody please write in the chat box. I need to be sure, because otherwise you'll ask me again. Not only asking me again is not important. Yeah, it is important, but more important is you will end up buying inferior stocks, and this happens with our students because they took it very lightly, like, didn't bother or something, or doing something else when I was discussing this. They bought the stocks. Okay, and after that, sir, why it is not performing well and on. Okay, R square should be more than 0.8. Now, what is R square? We need to understand these things. Okay, you see, let me tell you one thing. Okay, so now you see, now we have entered an era which comes under equity research and portfolio management. Right? So the learning phase is over. It is PhD phase. So that's why actual name of the subject is equity research and portfolio management. So research cannot be taught. Research can be guided because there are so many things. It's an ocean. Okay, so that's why it's not possible that I can teach you each and everything. Not possible. That's why it is called equity research. So you'll have to do it yourself, but I'm going to give you the guidelines only, guidance only. So that's why PhD, there is no teacher, there are guides, PhD guides. Right now, you are doing research and I am your guide. I am not a trainer right now. Okay. So now what is R square? R square gives the consistency of relationship. Okay. So one more thing I'll show you. So now you see, when they are large caps, so they will have to declare a benchmark. What is the benchmark? So benchmark is in this case, okay, return में जाओ. So they are issuing benchmark. It's a no. So benchmark means they will have to tell the investor as well as SEBI or all the concerned authorities that we are following this particular benchmark, this particular index. So I'll show you later. In this case, in case of large cap, so there is something called 500 Nifty 100 TRI. So that is the benchmark. All the calculations are done against that benchmark only. Okay, taking that as an independent variable. So if you do not understand that much, that is fine. That doesn't matter. Still, you will be able to make a lot of money. So now 92, this R square talks about the consistency of the fund. Now, for example, I keep giving this example. Now you see, in case of, you see, benchmark is not Nifty, okay? Benchmark is not Nifty. Benchmark is different. For different funds, benchmark is different. Like, you see, like, all these things you have to forget, okay? You'll have to remember right things. Benchmark not necessarily Nifty. It can be Nifty, but not necessarily. So now, what is consistency? Like, for example, you see, Sachin Tendulkar is a god of cricket. But you can still remember, I am an old guy, so I can remember all these old people only. I don't understand much about the new people. So Sachin Tendulkar, when he goes to the field, so we used to like, oh my God, like, he should do well. Because you never know. He goes, the god of cricket goes to the pitch, and in first ball, out. This happened many times. Or without a single run, 0 out. And we need crucial. Our requirement is crucial to win that match. But it's gone. Against that Dhoni. So when Dhoni goes, everybody, okay, Dhoni has gone, like, and it's good, man. Because we know he will be there. He is consistent. He will be there for some time. He may not be the god. He may not score like Sachin, but we know he has a definite track record. He is consistent. He doesn't give shock. He doesn't give surprises. Okay, as a batsman, I'm talking about. As a captain, of course, it's a different story, but as a batsman. So now Dhoni has got very high R square. Sachin Tendulkar, he is the best player, he is the god of cricket, but his R square is low. Okay? So now when the R square is low, what happens sometimes? We expect that the stock, that the Nifty, that the particular mutual funds will do well, but it may not do well. Same thing happened with a lot of our students. There is some fund called Quant Large Cap. Quant Large Cap, exceptionally good fund with less than 0.6 or 0.7 R square. Despite that, a lot of our students and good students, right? Of course, they are risk takers. So they bought that fund, and after that, when the market was going up and up, so they were not making any money. Okay. So why they were not making any money? I think, Dr. Azmera is there. Dr. Azmera, are you there? I think Dr. Azmera is also one who bought that fund, I believe. I said no. Okay. I recognize not that. Anyway. So I said no, do not buy that because R square is low. But since their performance is high, good, apart from R square, all the other performances are much, much better. So a lot of people bought it. Okay. So this is the significance of R square. Clear? Clear? Please type CLR, everybody. Please type CLR. Only 3, 4, 5, 6, 7, 8. Yeah, everybody I am saying. Type CLR, man. I have been speaking, at least CLR you can type, right? You are not speaking, right? Okay, okay, thank you so much. Thank you so much, okay? Thank you so much. Thank you so much. So now next comes your, so note it down. Then after that, next comes your, second, we will look at Sharpe ratio and Sortino ratio. Basically, we look at Sortino ratio, and then I will also describe Sharpe ratio. So Sortino ratio, next we discuss. Next, we look at Sortino ratio. Write it down. R square more than 0.8, then highest Sortino ratio. Highest Sortino ratio. Okay. So now, okay. So now this is say 100 to 150. Blue से लिखते हैं. Okay. So now this 100 to 150, this mutual fund A, fund A. Fund A. Okay. And fund B. Okay. So which one will you prefer? Fund A or Fund B? Both will take you from 100 to 150. If you take Fund A, it will also take you from 100 to 150. If you take Fund B, then also it will take you from 100 to 150. Which one will you prefer? Fund A or Fund B? Everybody, which one will you prefer? Fund A. Why Fund A? Because? Why Fund A? Because Fund B fluctuates more, right? Fund B fluctuates more, right? So the high volatility, Fund A is less volatility. That means it is less risky, less heart attack. Yes. Okay. Okay. So now for the same return, this is giving return is same. Okay. Let me change the color. It is a giving for the same return, you are taking less risk. And here, same return. But you are taking very high risk. Now you see, risk is both the side. Going up, very happy. Hey, okay, going down. Oh my God. Right? So this is risk is both the side. It's going up and going down. As a whole, total volatility is very high. Right? So when it goes up, then you feel very euphoric. Oh my God, it's coming down. You find BP, you get BP. Right? So now, same fund in the fund A, you are getting less BP. BP means blood pressure. Okay? So here your BP will be less, blood pressure will be less. Here your BP will be high. Okay? Return is same. For same return, here you are taking less BP. For same return, you are taking high BP. So that is risk adjusted return. And this is given by Sharpe ratio. Got it? Right? So this is given by Sharpe ratio. Higher is the Sharpe ratio, better it is. Higher return compared to risk. Okay. Clear? Everybody clear? Everybody clear? Higher Sharpe ratio means less BP. Higher Sharpe ratio means less BP. Lower Sharpe ratio means higher BP. Clear everybody? Please type CLR. Yeah, I am coming to sort in. I am coming to sort in. Yeah. Don't worry. Now what happens, as you are saying, okay? Now what happens? Now people are saying, hey, this statistician, Richard Short, they have calculated it. After that, people are saying, hey, you see, it's okay when it goes up. We are happy when it goes up. BP increases when it goes down. Then only BP increases. You do something about that. You don't have to think it is going up. Okay. Then what these guys did, so they cut off the top side. They took only the bottom side. Okay. So now top side, okay, fine. You are not concerned with top. So when it goes up, you find good only. When it's coming down, then only you find bad. So now let us consider that downside only. Okay. So then they modified it. So how they modified it? They modified it this way. They took only the half of it. ठीक है, we will consider only this part. We will consider. Okay, consider only this part. Okay, here also you consider only this part. This part you consider only, calculate. And then they found out with this new ratio. So that is called, that is return for the same returns. Only risk means both going up and down. Only downside risk. Downside risk. Okay? And that is Sortino ratio. Mr. Sortino, cannot remember his full name. Mr. Sortino gave this ratio. So that is why this gives us the best perspective. Because, okay, when it goes up, we are fine. When it comes down, then only we are worried. So that means that is why I'm saying Sortino ratio is a better version. It came later. Earlier, only Sharpe ratio is there. Okay. So now that is why we consider Sortino ratio. Clear? Everybody clear? Anybody has any doubt? You can ask me. Otherwise, type CLR. Everybody. Type CLR. Okay. If you do not type CLR, then I'll not go ahead. Everybody type CLR. Or anybody has any question, you can ask me. Okay, got it. Okay. Awesome. Awesome. Beautiful. Okay. Awesome. So now this is the, now R square you have done Sortino ratio. Then this, suppose Sortino ratio, in these two cases, you see Sortino ratios are almost same. Now you are lucky. Why you are lucky? Because this time we have got this example. Earlier it was not there. So you see this Sortino ratio, they are almost same. Got it? So now what to look at? Next is what to look at. Sortino ratio should be high. Highest Sortino ratio. Okay? Highest Sortino ratio. R square more than 0.8, then highest Sortino ratio. And then after that, when both are competing, then we look at alpha. Okay, so now we see which one has got higher alpha. Right? So here we have, this is alpha is 4.64, here alpha is 5.77. So what is alpha? What is alpha? What is alpha? Anybody has any idea what is alpha? What is alpha? Return above market return. Okay, more returns for same investments, and not exactly now. Okay, let me tell you. Yeah, so you have got some idea. Okay, that's great. That is great. Now, what is alpha? Alpha is, what is alpha? Alpha is, even if the market does not move, even if the market gives zero return, okay, even if the market gives zero return, then this particular fund will give you alpha return. Understood? That is alpha. Okay. So in a way, you can say on an average, return above the market, above the benchmark, right? Age over average. Yes, kind of. It's age over average. Basically, this is the exact statistical definition. Even if the market does not move, how much return this particular stock will give, or this particular mutual funds will give. So that is alpha. We need to look at these things first to choose the best fund. So now we have got it. We have got Nippon and DSP. DSP has been added recently. Earlier it was not there. Earlier Pru-ICICI is still there, I believe, right? Yeah, Pru-ICICI is there. Pru-ICICI has been there for ages. Okay, Nippon came later. HDFC large cap is also there for so many period. DSP came just now, couple of days back only. Okay, in fact, last month I was not aware. So DSP was there. Okay, so now we know. Now, if you find it difficult to choose, you can make 50-50. Okay, both are good fun. So you cannot make out where to go. So you can make 50-50. So now, then we can see something else. What else we need to look at? Suppose we are choosing, say, Nippon. Right now we are going with Nippon only. Okay, so I am doing one thing. Okay, I am showing you both Nippon and DSP. Okay, both are 5-star fund. So when you are confused which one to choose, then yes, exactly, Rupinder, awesome, right? So we can go with, then we can see exit load. So that we will find others, like as I showed you that day, other, you can see this is what? DSP large cap, 1% for redemption within 364 days. And in case of Nippon, 1% of redemption within 7 days. Okay, now that is the reason, because since we switch, if we do not switch, then it doesn't matter. If you switch, if there is a probability that you will be switching within 364 days, then you'll have to lose 1% extra if you invest in this particular fund. Okay, so then in that case, it is better with this. So that's why we prefer Nippon. Even if there is of course, Nippon is the best, but even if there is a performance-wise, there is some differences. So we look at that exit load, and then based on the exit load, we take a decision. Okay, so then after that, okay, now even if you can see that other things also, other things means you can see the return, etc. But this is like it's not necessary. So say okay, 3 years return कितना है? DSP is 18.83. Nippon is 21.19. 5 years is 24.74. 5 years is 19.47. 7 years 12.82. 7 years is 15.89. Okay, are you getting it? So like in some aspect it's better, some aspect is better. So of course now Nippon, we loved it because it has got less exit load. Okay, so this is how you choose the best mutual fund. This is the way, whatever mutual fund, whether it is a debt fund, it is large cap, mid cap, small cap, or any damn mutual funds. Even if you do not suggest, suppose if you are going, but only thing is that you will have to see the benchmark properly. Now I am telling you why it is. Suppose if you go to others, you will see the benchmark. BSE 100 TRI. This is the benchmark. Okay, all the calculations are based on this. BSE 100 TRI, this is the benchmark. Okay, BSE 100 TRI is an index. Benchmark is not always Nifty. So everything like, small cap, it has got different benchmark. Mid cap, it has got different benchmark. Okay, got it? Clear, everybody? This return is XIRR. This return is XIRR Deepak. Of course, always remember, as we discussed in our advanced course, if nothing is returned, it should be CAGR only. So CAGR means it can be XIRR, IRR, they're same results. Okay, all the CAGR, whatever method you use XIRR, you use IRR, you use your rate method, you use manual method, you will get the same results. Okay, only thing is that since we cannot use one method, we use another method. Clear? Is it 1% of investment amount or amongst the investment? Anybody has any question now? You tell me. This is how you choose the best fund amongst so many funds. So you know how to choose different categories of fund, and in that particular category, how to choose the best fund. Best fund, that's what you know. Okay. Let me tell you, there are many advisors. They do not know all this stuff because they are not taught anywhere somehow. Okay. Sharpe ratio you can ignore. Sharpe ratio. That's why I'm giving you Sortino. Okay. That's why I'm giving you Sortino. Sortino ratio is better version of Sharpe ratio. Go with Sortino ratio. So if we switch in Nippon after 7 days, no exit load. No exit load, Kabir. Okay. They have written it. No exit load. So no exit load. Okay. Okay. Okay, just a moment. Okay, what about the regular versus direct? Okay, regular versus direct. You say regular versus direct. Direct is when you invest direct fund, then you do not have to pay any these things, any commission. Their expense ratios are slightly less in case of direct fund. In case of regular fund, there is a higher expense ratio because they give commission to the distributors. Like for our clients, we always use regular fund. We can use regular funds only. Like you see, distributors cannot use direct fund. There is no way. So we are distributors also, not Saint Todd Solutions Private Limited. There's a different company, Utpal KC Wealth. So Utpal KC Wealth is a distributor. So we invest in regular fund, and because of that, we get commission from the mutual fund houses. Okay. Now, if the mutual fund MFD, the distributor or the advisor providing you service, then you can go ahead with regular fund. If they are not providing any service, you are doing everything yourself, then there is no point buying regular fund. Okay. For example, banks, like not yesterday, on day before, I believe. No, day before we had class, right? Thursday. Thursday, one of the guys, so who was with you in advanced class, CPC advanced. So now he wants us to manage his money. So now he showed me his these things. He has got a big portfolio. So he showed me his portfolios. Now he is doing with one of the banks, and it is all nonsense khicharis, meaningless nonsense khicharis. And he is an old guy, is being misguided like anything. Since he did that advanced course, after that he could understand that there is a lot of mistakes. That's why he insisted that, and he's a pretty old guy, so insisted that we manage his money. Okay, and that's what we are going to do. So now, if somebody is saying all the now I say like these guys are very good when something new comes to sell, but really taking care of the money, that is the main problem, main issue. Okay, if somebody is not doing that service properly, there is no point going with regular. Go with direct. And this is the reason why the concept of direct fund came. because all these mutual fund houses, they saw that all this, particularly this new internet, everybody is giving a platform and then they are getting commission. Mutual funds thought, okay, I can also do that. I'm a mutual fund house. Why I need your platform to distribute my mutual funds to the clients? I can do it myself. All the mutual funds started creating their own platforms. Okay, so then only all these guys, they started saying, no, we'll also do direct fund. Now, all these people who do not provide any kind of service, so what they are doing, they are also started giving direct funds, but they will never give service because they believe in mass market. I also believe in mass market, but it is not without service. Okay. So now कुछ भी खरीदता है, कुछ भी, wherever their commission is high, they start promoting it, and it's automatic. Okay. So now you see, Nippon is best. Commission from Nippon is the lowest because they know they are best. Their exit load is almost nil. It's a zero. Like 7 days is what? Anybody can wait for 7 days. Okay. So that's the reason. So they are having, so they know, like, people will come to them, those who are at least knowledgeable people. Okay. So this is how it is. Okay. So just so Kabir, first R square, then Sharp, Sortino, Sharpney, remove Sharp, Kabir. First R square, Sharp I told because I need to describe Sortino. That's why Sharp came. Sortino is a better version of Sharp. So Sharp, you remove it. It will be too complex then. Okay? Very simple. R square more than 0.8, then based Sortino, then based alpha, then exit low. That's it. Okay? Return nahi dekhne ka. No return. Kabir, no return. No return. I just saw it like this. Okay, these things are there. That's all. R square more than 0.8, then Sortino, then alpha. That's it. Okay, and then exit load. Yes, exit load, then exit load 4. These are the 4 things. If you look at the return, then you will end up buying wrong funds. That's what everybody does. That's why 95% lose money. Okay. Okay, Arpita, awesome. Value research, fund monitor, value research fund, management style, choose 5-star, active risk, okay, risk, R squared should be more than 0.8. Sortino ratio, highest Sortino ratio, alpha to complete with 2 funds, other alpha category, observe the benchmark, BSE 100 TRI, and then check exit load. BSE 100 TRI, you don't have to show, that is for your knowledge purpose. You don't have to see, it will be the same benchmark only. Okay, it will be comparable benchmark when you are following our SOP, right? So now when you follow thematic fund, when you follow flexi caps and all these things, then they don't have any fixed thing. So then what they do, let me tell you what they do. They try to fix a benchmark which they know they can easily beat. Understood? Right? So all this badmasi they do. But that's why, like, since we go with clean funds, clean funds means these are clean funds. Index, large cap, mid cap, small cap. No khichdi, no mixer. So they cannot do that. Okay. So they will have to give that right index. So either they will give BSE 100 TRI or they will give NSE 100 TRI. Both are comparable. Both are exactly, yeah, they are from different companies, but they are same, very, very similar. Don't worry. Okay, got it. Awesome, man. Kabir, sir, can we research a specific fund also on value research online? Yeah, you can do that. That's what we have done, right? We have what we have done. That's what we have done. Okay. And doing the research, you can do this much only. But otherwise, there are a lot of other data. Slowly, Kabir, as you progress, as you become more and more knowledgeable, you can definitely go ahead. Always good knowledge is always better, but good knowledge only. Okay, that is very important. Good knowledge only. Also, sir, how to research future growth of a particular fund? Future, Kabir, future growth of a particular fund, you cannot find out. You can find out future growth of a company. It is the fund manager's responsibility that he choose the right company which is going to grow in future. Okay? And if you are really interested how to do that, so for that you'll have to do MIM. In MIM, we choose companies based on that. In case of mutual funds, it is not possible. That is why we buy mutual funds, because we have got limited knowledge. We depend on the knowledge of the fund manager. Okay, got it? Okay, depends, Surya, Khattar, dear sir, should we sell our small cap and mid cap and switch to large cap now? So you know it. So now you have knowledge. Now you have knowledge. Now you know what to do, what not to do. Okay, all the khichuris, all the kacharas, now you'll have to clean up. First thing is that get rid of all this nonsense 3-star, 2-star unrated funds. They are very, very risky. Okay, they are very high commission giving funds. That's why they are sold to you. Okay, very simple, very straightforward. Okay, it is always tempting for me to recommend the stocks, recommend the funds which are not 5-star, 4-star, because they give very beautiful commission. For example, we recommend Nippon. Nippon is amongst large cap fund, the lowest commission is given by Nippon. And all our clients have that. Some of them have also Pru ICICI, because Pru ICICI was also earlier competing. Now it's going there. But the thing is that they have been consistent. Okay, I can remember like, so many years they are there in the 5-star category. Pru ICICI. Okay, Nippon came later. DSP came recently. In between, Canada Robeco was there. Very good fund once upon a time. Now it is being downgraded to 4-star or 3-star, I believe. So yeah, this is how it is. Got it? Okay. Rohit, exit load 1%, for example, is calculated on invested amount only, or interest is added to principal amount? No, Rohit, whatever is the total amount now. Okay, suppose you invested 100 rupees. Now it has become 150 rupees. So 1% on 150 rupees. Today you are selling. Today, whatever is the total market value, NAV, this is called NAV. Okay, it's not actually interest, it's the growth actually. Okay, it's the growth, it's the profit. It's not interest, it's profit. So now total value of the fund. Okay, got it? Okay. Kabir, I connect with Poonam then for MIM. Kabir, MIM, we will when we will start our batch, then you will get the information. Please be in touch with in the community. So all of you guys are in Telegram group, right? If anybody is not in Telegram group, please make sure. Request Poonam to get you inside Telegram group. Okay, inside Telegram group, not Telegram, Telegram group. So Telegram is also like WhatsApp. There are a lot of people, they join Telegram and they think that they are into a group. So inside Telegram, there is a group. Why Telegram? Telegram is like very safe in the sense that your personal numbers, etc. are not visible. And it's a huge capacity. We have already, I think how much? 2,250 or something. Okay, there. So now please, all the informations we will get in the Telegram group. Apart from that, when we start batch, you will get mails. You will get either mail or WhatsApp message or both. But definitely you will get the informations in all the groups. That's for sure. Whatever group you are in. Okay, not in advance. Advance, we do not invite them to MIM, because before doing MIM, one should do this workshop. These things we are not going to repeat here. They are in MIM. So from here it will start. Okay, यहाँ से चालू होएगा. Okay. How is star rating calculated? Kabir, they do that research based on Sharpe, Sortino, and there are so many criterias. Okay. So basically, you see, the biggest bearing is either Sharpe or Sortino out of these two. So now we used to give, I used to give star rating when I was working for Business Standard. And that is the first time we gave star rating to mutual funds. These guys, this value research were new. Value research supplied us the data, and we crunched the data. And for the first time, I started giving star rating to all the mutual fund companies. After that, of course, later I left and I joined companies, other broking houses and all. Then value research, they continued and they started giving star rating, and that star rating is still continuing. So when I did it on Sharpe ratio, because at that point of time, you see, market was very, very new. Getting data itself was a challenge. So I just gave Sharpe ratio and then liquidity, etc. Based on that, I gave the rating. So when value research, they started doing it like themselves, and then they continue. Right now, they give different. They look at Sharpe ratio. Of course, Sharpe ratio was the main. If not Sharpe ratio, then Sortino ratio. That is for main. That is the main criteria because that is the risk adjusted return. Then after that, they will see other stuff also. So they will give weightage. Based on that weightage, they will give the rating, and they look at 3 years performance based on 3 years performance. Okay. That you can see, like you can see somewhere you will see their research methodology. Exactly, I don't know. So if when you look at their research methodology, you'll find them. Okay. Okay. Deepak, admin, please tell Poonam. Okay. If you are not in Telegram group, please tell to Poonam. Santosh, please type your question. Kavir, okay, sir, we need to look at the funds always or at specific frequency. Now, you see, best thing is, Kavir, you keep coming to our Monday session. You will automatically come to know what is happening. You are in a group. So you are in WhatsApp group, you are in Telegram group, you will automatically know when the market will change. You see, there will be a lot of noise in the group. Hey, market is coming down, it is below 21p. So you must have noticed it. Okay. So you be there, so you will start noticing. Whenever there is a change, then you will see people are discussing in groups. So you'll come to know. Okay. Otherwise, you can once in a month, you can try, you can just check. Okay. Okay. So if we were to start investment in mutual funds today, how should I start, or is this question too early? It is not too early, Inito. It is just right. Today you start. Okay, of course, there is one part is there. That is the planning part. Planning part we'll cover tomorrow, but still you can start today. So today, if you start, what you should buy? Now I am asking you this question, Inito. Inito, since you have completed Utpal's 3F course, right? Now please advise me. What should I buy now? Inito, please advise me. Which large cap? There are so many large cap. Which one? Nippon. Can I continue investing in Nippon for 10 years or 15? Should I continue? Should I buy and should I continue for 10 years or 15 years? Tell me. Should I continue? Okay, got it. You got it, man. You know it. Okay. Depends on various. Awesome, man. You guys are experts, so you know it. Don't wait. Of course, you see now. Now, let me tell you one thing. Now, Monday we will discuss planning. Planning means Monday means it is already there in the video sessions planning, but we will do it. I will do it myself because this is crucial. This is the key. So all this knowledge we are going to apply. So now you see, let me tell you in the planning, how we decide if we are investing for more than 10 years, we follow beta value balancing. Okay, BV balancing you can say, or SOP. We follow our SOP if we are investing more than 10 years. If we are investing for less than 10 years, then we ask ourselves, can we take risk? Okay. So now, if the answer is yes, we can take risk, then we follow SOP. If we think, no, we cannot take risk, say it is kids education, and our things are suppose very tight, our situation is tight, we cannot take risk, we need this much of money anyhow, then we will invest in debt funds. You know how to choose the best debt funds. And how we choose the best debt funds type based on the time. If it is 5 years, then we go with mid duration. If it is 7 years, 8 years, we go with either long duration, or mid to long duration. You see, long duration, there are no 5-star funds. So this is risky. We don't know what is happening. We can say mid duration debt fund, or you can do one thing, since you have knowledge. If you think, no, I'll buy long duration only. So you can see all this Sortino, etc., R-square, etc., and you can decide yourself because now you have knowledge. Okay. But if you think, no, first I need to make sure that I need at least 4-star fund. 4-star funds and 5-star funds are outperformers. 3-star funds, I think they are not outperformer, and 2-star, 1-star, they are like below. They are losers. Okay, check that yourself. Like normally, this is my observation is that. So in the planning, if investment period is less than 10 years, and if we cannot take risk, in that case, we invest in debt funds. Okay. So debt now two things. Now suppose sometimes what happens, sometimes there are people who say like, we don't have money and I want to take risk because I don't have that much of money. I cannot invest this much. Then my question now my question is, okay, what will happen if the market goes down this same year when you need money? Because this happened earlier. It can happen tomorrow. It can happen when you actually need money for your kids' education. Okay, then I'll ask you, what will you do? Suppose your market is down, market goes down to say 16 PE. What will you do? Okay, so then somebody answered like, I'll take loan. That's fine. You know what to do. That is the most important thing. You know what to do. We don't know what will happen tomorrow. We must know what to do if something happens. Okay, you'll make a lot of money if you do that, if you follow that. Where to buy bonds? We don't have to buy bonds. We have to buy mutual funds only, bond mutual funds. I showed you. You don't buy bonds. It's difficult to manage. Okay, you can buy it, right? I was a very regular buyer of bonds actually once upon a time. Nowadays, I don't do that. Okay, there are reasons. Earlier, there used to be a lot of beautiful infrastructure bonds. Normally, I used to buy them. So nowadays, yeah, there are some websites. There are a lot of websites actually that you can buy bonds. But my suggestion is buy bond mutual funds. Okay. Can we check which is the best mid-duration debt funds at the moment? Arnab, this is a homework. Okay. Please do it yourself. And if you cannot do that, then Monday, tomorrow after the session is over, then I'll show you. But please do it yourself. Choose and then you tell me tomorrow. Okay, yourself, because I'll forget. Okay, Arnab Singh. Okay, yeah, please do that. Okay, guys, it is already 4. Okay, I told you, right? It's going to be a marathon. Now I'm pretty sure if I start planning, it will go to 6:30 easily. Easily, it will go to 6:30. Okay, everybody, how is your confidence level? Okay, Deepak has already done it, man. Okay, super. What is your confidence level now? Okay, you see, Deepak has done it, man. Already. Beautiful. Parag Parikh, okay, this is a flexi cap. Okay, no. This is a flexi cap, mid cap, large cap. No, ये खिचड़ी है पूरा. Hi, what is the percentage? What is the percentage? What is the percentage? Everybody give your percentage. Okay. Give your percentage. What is the percentage of confidence that you can choose the right mutual funds for your requirement without discussing anything with anybody, without asking me? Okay. Are you going to ask me? Shobhan, there is nothing theoretical. Shobhan, okay, now. Okay, your theoretical, I am making practical right now. Shobhan, please suggest me. I want to invest for my retirement. Please suggest me the best mutual fund. Shobhan. Only Shobhan will answer. Only Shobhan will answer. Shobhan, suggest me. I want to, for my retirement, another 10 years, I want to invest in a mutual funds. Please suggest me the best fund. Shobhan. Large cap, Nippon India large cap. Okay, awesome. So can I continue investing for 10 years? Same fund should I continue? Only Shobhan will answer. Should I continue same fund for 10 years? Yes or no? Should I continue? For 10 years, I will be remain invested as of now up to 23 years. So you'll have to discuss with me, right? Okay, so now what I'll do, simply I'll open my coin account and I'll buy Nippon large cap for whatever money I have. That's it. That is the practical. Done. After 3 days, I'll get the notice that it has been allotted. Okay, Shobha, practical, extremely practical, no theory. You know exactly what to do. Right? Coin account, I am using coin account. So that's why I'm using all those. Okay, if there is somebody who are our client also, right? You just, Mohini ma'am will do it for you. You don't have to do anything. Okay, you just tell her, okay, please buy. She herself will tell Nippon will buy. Okay, but you say, no, you buy 50% DSP also. So she will do that. That's it. There's nothing like separate practical. That's it. You just open your account and buy right now. If it is more than 10 years, if it is less than 10 years, wait till Monday. Okay? If it is more than 10 years, and if you have kachras, if you have khichuris, clean it up. Can you do that? Shubham, Shubham, do you have some khichuris and kachras? Yes. Can you clean it up? Open your, which app do you use? Shubham, which app do you use? NJ, open up. No service. I know that. Giving all the kachras, right? Just keep sell. So better you become our client. NJ ko itna paisa de rahe ho. Okay. Of course, we have requirements, of course. Okay. Clear? So there is nothing theoretical. Everything is practical only. Okay, right now you cannot say it's just theory. It's not theory. Theory was over long time back. Everything is practical. Look at this, take decision. If there's a kachra, sell them off. They will say, oh my God, you have got this much. Okay, that's what I say. Okay, I got one mutual funds getting 60% return. My wife said, oh my God, you have got 60% return. Okay, I have got this much of money. Okay, in this bank account, you see there are so many lakhs there. Let us invest. Man, 60% return we have got. It's ripe. It's ripe. If you keep it, then it will start rotting. Done. Find out something else which is going to give 60% return. It has given 60% return. Yeah, Buddha ho gaya. It's gone. Okay? When the time will come, then probably, it's not saying like, kabhi nahi karenge. It's not like that. When the time will come, when it will give us indication, yeah, right time, then we'll invest again. But right now, because we have got 60%, I'll put another 10 lakhs. It will give another 60%, 120%, then 180%. Are you mad? Don't listen to all this nonsense stuff. You are getting only 60%, you are going to redeem it? Well, yes, I am going to redeem it. I need to find out something which is going to give me 60%, not which has given 60%. That's why I do not look at the return. Look at the statistics I have given. In that statistics, if it is coming out to be high, that's a different story. It can happen. It's a best fund getting already given very good return. It's happened. It will happen. But do not just follow returns. Okay? Got it? Okay, can we invest 8 lakhs at once time in Nippon, sir? Yes, why not, Deepak? So we do in crores. Okay. And if you think, no, of course, it's easy. So we are doing in crores, institutions we are making, and we have got so rich investors also. So yeah, so our requirement is minimum 10 lakhs, but there are people who are investing in crores. So we do that. And if you think, no, I am not comfortable, then you can go with DSP. You can look at the this also, this Pru ICICI. What is the exit load? I cannot remember. But I can remember earlier we used to invest in Pru ICICI also. Okay, because it's a good fund and it has been there consistent, very consistent. It has so many funds come and gone. But Pru ICICI is still there. Okay, it's really very good R square. Okay. Okay. Arpita, how to reach Mohini ma'am? Okay. Okay, you see, like I think right now our requirement is minimum investment should be 10 lakhs lump sum. Okay, and then whatever SIP you do, that is okay. Because what happens, we don't have bandwidth. It's not that like we don't want to take people. We don't have bandwidth, and since we give very good service means like we really take care of like she looks at it and she messes everybody, right? She messes everybody, each and every client, and she does like initiate all this stuff. Okay, there are so many things we'll have to do. It's not just like what others are doing. They are giving you an app and you do it yourself. This is not true with us. We are NSE members and we really even plan people's money. Those who are rich clients, for them we also do the planning. Okay, so since we do quite a lot of work, so it is not possible for us that we can entertain everybody, but we are working towards that such that we can entertain everybody. We can take all kind of clients, even somebody who is investing 500 rupees also. Okay, but until and unless we are not sure, that we don't have a mechanism to serve them, so that's why we are working with AIs. AIs are gadhas. You'll have to train them, then only. And AI is as good as you are. How you train, so if you can train them well, they will be good. If you cannot train them well, they will be good as. So we are training them. Okay, so we are training them. We are training to like we are trying to do something such that even if somebody has 500 rupees to invest, such that we can guide them properly. Okay, so that's what we are doing. So that is the reason. So we cannot entertain everybody. I'm giving you her number. Mohini was like students, like you are here, she was here. Such a chartered accountant. And so very active, extremely active in the group. Today also she is active, but when before joining also she was very, very active in the group. So normally we have a form, but since you have done 3F, so you mentioned that I am a 3F, send her a WhatsApp message, tell that I am a 3F student karke, 3F participants, then she will entertain. Otherwise, she may not entertain. And then 673. Yeah, this is her number, okay? Oh. Okay, so please mention that you are a 3F student, and I think she's also in your group. I think she might be one of the admin in your group also. Okay. Okay, just a moment. And okay, selling all SC and MCS. Deepak, you'll have to clean it up on a 10% PMS, 10 lakhs PMS. Not PMS, we invest only in mutual funds. Okay, not other things. As of now, we have not started. This is also we started because of a lot of demand from our students only. You see, most of our students are our clients are our students. Then now only we have started getting like outside clients, but almost all of them, 99% of them, they have done CPC advance. I think not a single one who has not done CPC advance. Normally after CPC advance, they come and they join, and they do, some of them they do not do 3F courses. They said, okay, I'm giving you my money, so you manage it karke. Okay. So that is why. So we have recently started. We are not yet 1 year old, but we are growing really very fast. And we will do PMS, etc. Definitely we will do, and we are getting a lot of demand since we are good, man. Okay. Right. So now is MIM students and then FNO students, they know that we make money. Got it? But still, okay, taking license, etc. It takes a lot of time and lots of headache. So probably we'll be doing it because right now I can do. I have a lot of strength and all. I can teach, but I don't know I cannot continue teaching. Okay. So definitely that is why I am developing that company. That company will remain. This company also will remain. Definitely will. Mohini ma'am is very reluctant in teaching. So neighbor I. So I am looking for trainers, good trainers amongst ourselves. Let's see, there are few guys are there. So now you see, like, there are two things. First thing is that he should be good. He or she should be good. And he should be good at teaching. So both concept wise, she should be good, very clear. And then training also. Okay, because delivering, transferring the knowledge, it's an art, it's a skill. So getting both is slightly challenging. That is the main issue. Okay. Sir, which index fund do you recommend, since there are many terminologies? I am confused. I am seeing options like SDFC Nifty 50, whether that is the same. Now, SDFC Nifty 50 is the same. Okay, so now let me tell you, Devika, beautiful question you are asking. In case of index funds, almost all are same. And index fund, please do not compare index fund. Do not research index fund in value research. Why? Let me tell you. Okay, just a moment. Divyesh, what is CPC advance? Hey, Divyesh, CPC advance is that where you paid 2,000 rupees. Remember? Similar workshop happened. Okay, so that is CPC advance. Okay. So there you join this, right? So first you join that. So that is the first step. So then after that, this is the next ultimate step. Okay. Same strategy for small cap, mid cap selection is true, right? Yes, exactly, Kabir. Same strategy. Same strategy. First you decide which cap. So once you know which cap, then the same strategy. With anything, with flexi cap, etc. also, in case if you do that. Okay, but we do not recommend flexi cap, etc. because they are flexi cap, etc. are very, very much fund manager dependent. There is no fixed characteristics. Okay, so they are not a single color. They are like, color mixer. You're getting it? So when you're the color mixer, sometimes it becomes yellow, sometimes it becomes green. You cannot take decision, right? So if you have to paint a picture, right? So is to paint a picture, you need something where the color is solid. This is this color. Okay, with this you can mix that. Flexi cap is like, it's a completely different colors, and color keeps on changing. Are you getting it? Okay, so just a moment. Now, how to get added to the Telegram group you mentioned? Ritesh, you just ask in your group. Send a message to Poonam. In the group itself, you message, na? You don't have to go anywhere. Like you are in a WhatsApp group, am I right, Ritesh? You're in a WhatsApp group, right? Okay, yeah. In the group itself, okay, hi Poonam, please add me to the Telegram group. Then she will share the district. Please add Telegram group. Okay, you see, let me tell you. There are a lot of students, they after doing 3F, they have joined CPC Advanced again. And when we look at their, now it is a big headache. It is not that all the time we can detect. Most of the time we cannot detect. And when we detect, we refund and we have to spend money for that. Because, you see, through payment gateway only we have to refund, and they deduct fees for that. We have seen the people join in 21, 22 and again joining advance. Then again join 3F course. When they join 3F course, then only we come to know that they are already member. Okay, because you cannot make two or this, and that is also luckily, if they use different email ID, that is also not possible. So that means for the same course, which is a lifetime course, they are paying twice. Neither they are aware, not we are aware. In case they use the same email ID, then only we can catch, because we get that information that this guy is already a member. Then we speak, hey, this is what is happening. Then we can find out in our database, we find out that this guy is already a member. It happened with many times. So why it happened? Because they completely lost touch with us, because now they've forgotten, okay, who was this? Okay, who is this course for? So that is why please join Telegram group. This WhatsApp group will be closed after some time, but Telegram group will remain. It has got capacity of 2 lakhs rupees. Sorry, 2 lakhs people, individuals. Okay, got it? Okay, so now I'm going to show you, since you have asked this question, I am going to show you. So if you say, Now, if you say Nifty 50 fund, if you do research Nifty 50, say SBI Nifty ETF as well as index fund, okay, UTI Nifty index fund, SDFC Nifty index fund, okay, Nifty 50 index fund. Now you see all this Nifty 50 index fund, they are 3-star. Okay, so like Bandhan is the best as of now. Bandhan Nifty 50. What is there? Bandhan Nifty 50 index. Okay, you see Bandhan Nifty 50 fund, which is so now you say this is only 3-star. Now let me tell you, like now tell me for Nifty 50, Bandhan Nifty 50, what is the benchmark? What is the benchmark? What is the benchmark? Okay, yeah, Rohit, awesome, right? Benchmark is Nifty 50, right? Benchmark, so you know it, right? You see, you know it. Got it? Now you see what they're using here. Okay, they are using Nifty 50 TRI. Now when they are comparing it, when they are doing the research, what they are using? What they are using as a benchmark? Can you see it? What they are using as a benchmark? They are using benchmark as 100 TRI. Got it? They are using benchmark as 100 TRI. Not only that, it is being categorized as large cap. See, equity, large cap, direct plan. Large cap. Large cap means value research is analyzing it against BSE 100 TRI. Okay, this is right or wrong? This is right or wrong? This is right or wrong? Everybody is wrong, right? Yeah. So now you see, like you are saying you have like only 80%, 90% confidence, and you are saying it is. Now you can see, you can find what is wrong in value research, man. Okay. I think you should give me 10 stars somehow in Google. Okay. Are you getting it? This is wrong. Since this is wrong, because they are calculating the performance of a conservative fund against large cap. Large cap means which is slightly aggressive than the conservative fund, right? So that is why you will see that their performance is muted, their performance is low, and you are giving 3-star fund, which is not correct. Got it? Yeah. They should be compared against Nifty 50. That is why for choosing the right index fund, you just go to Google or you go to ET Money and you just type out the best Nifty 50 fund. Nifty 50, not Nifty 50 next, not Nifty 50 equal, not something. Okay, so these are all, they are not index fund. Index fund is Nifty 50 fund or Sensex 30 fund. That's it. No next, not equal index, not bot kuch sometimes like they use. Don't go with all this nonsense. Okay, just go do Google best fund and you will see hardly there are differences. 0.01% difference. Bandhan is the, I think it is best. Couple of days back I saw it is still giving the best return. Next best is giving 0.01% less. Next is giving again another 0.01% less. So it is like that. It's a very insignificant. Okay. So that's why do not use for Nifty, do not use index fund, do not use value research because they are wrongly analyzed. You don't have to do anything. Like, they are all same. They are all passive funds. They are not active funds. Okay. Kabir, Is BSE 100 TRI tough to beat as benchmark? You see, Kabir, beautiful question you are asking, man. Is BSE 100 TRI tough to beat as a benchmark? All the benchmark are tough to beat. Okay? But only the good funds they can beat, and that is why there are only limited 5-star funds in any category. You look at the other small cap, large cap, small cap, mid cap. Now you know how to look at. You just look at the mid cap, look at the small cap, and you see. Okay, majorities are losers. You'll see yourself. Now you know how to see. Okay, when you join this, then I had to convince you. How I convinced you? Showing it is Economic Times data, because you know Economic Times is saying to sahi hoga. Okay. Right? So now I don't have to do it. I don't have to show you. Like, you know how to find out yourself. Okay, find out yourself. Okay. Okay, is there any question? If there is no question, then I'm switching it off. Already 4:20. So any question, please ask me. Everything is clear. If everything is clear, see you tomorrow. Tomorrow is Sunday. Tomorrow in the support session, we will do the planning part. Okay, so please, till then, okay, please make sure. Now I am telling you what you need to do. A lot of people has already gone out. So for tomorrow, if you really want to make it very, very robust, the planning very, very robust, all your investments, your PPF, EPF, NSC, NPS, etc., whatever investment you have, what is the current market value? Note them down. Okay. So then again, we'll be needing these calculators I showed you on Friday itself. One is that planner, which is in the last but one. Keep it ready. And then the this one, calculator, SIP, step up SIP calculator. These two things keep ready, and all the values of assets. Properties you have, what is the approximate market value? You don't have to do that exact market value, approximate market value of all the properties, right? Everything you keep ready. We are going to use all of them to make your plan. My target is such that tomorrow itself, all of you can at least make sure that your retirement is sealed, okay, locked, right? That much. And I'm pretty sure a lot of you guys, you will be doing much more than the requirement. Some of you will have to do a little bit tight thing. So don't worry. Don't worry. We will fix it. Okay? We will fix it. Okay. Thank you so much, Rupinder. So please do write. Anybody needs this thing, what time tomorrow? Tomorrow is 8. Normal support session. Okay. Everybody has got the link of review link. Those who have already done review, please do not do it again. Then it will be erased. All your earlier reviews will be erased. Okay, so those who have not done review, please do that review. Okay, so that will give me the real encouragement. Everybody pays the same amount. Okay, but when you write, so then I go through that language that you are using. So that gives me real encouragement. ठीक है यार, चलो. ठीक है, 1, 2 करके we have got more than 600. Right? So, and I read each and every review. So please do that. Okay. Thank you. Thank you, guys. Thank you, guys. Review done. Thank you so much, Anup. Okay, please do, everybody. Those who have not done the review, please do. Help others. Help me going ahead and help others finding the right solutions. Okay. You're welcome. So see you tomorrow. Done review from my end already. Yeah, Rupinder. Yeah. Thank you so much. Thank you so much. Those who have already done it. So I know, I have read all the reviews. Sometimes if somebody has done it in odd times, then I miss it. But normally I read all the reviews. Okay? Tomorrow I'll read all the reviews. Okay, guys, see you then. See you tomorrow. Bye-bye.